I don't have my gavel.
Oh, I'll get you one.
We will now open the public hearing on House Bill 297 and recognize Representative Almy.
There. Thank you, Madam Chair and committee. I have a testimony which is a little long, so I'm not going to talk most of it, but I did want the many people on this committee who are new enough that you haven't been told what dedicated funds are and why they belong in this committee on what has been going on for the last 24 years, I think it is. As we've corralled the dedicated funds of the state but this bill is every single term, every single year, the dedicated funds committee gets together and after the chair talks with the person at DAS who is handling the reporting of dedicated funds there. And we have a 5-year cycle through which every dedicated fund in the state goes organized into agencies of the state. And it took us a couple of terms to figure out what we were doing and get it right. And we started to get it right 3 years ago. And now that is completely right, I hope, I think. Now we're turning out a spreadsheet along with the bill every year that shows what we did or didn't do with each of the dedicated funds that was on our list for that year. And I handed you just a part of the spreadsheet for this time. You can find it under the Dedicated Funds Committee under statutory committees. And look at it for yourself. It's more in the form of a draft than a final version, because there can frequently observations or questions in the comments section that may be worthy of following up 5 years later. But there are also explanations in the purpose and the funding source that explain very succinctly what that dedicated fund is there for and where it's getting its money from. Some of the comments tend to be on this fund has been increasing the amount of money in the fund for quite some time, and they said that they're going to be building a capital project soon, or we didn't get any information from them about that, but we didn't have time, and so it's still a question. So that's the spreadsheet that goes along with the annual report. The annual report went in from Representative Major last fall and is under the statutory committee's dedicated funds. You just look up dedicated and it comes up. But the dedicated funds of the state are formed for a specific purpose. They were planned to be funded either by donations and grants or a specific fee, fine, or penalty that is relevant to their purpose. But after early challenges, the courts allowed that relevance to be very broad as long as the legislature has created the law. They defer to the legislature usually when the link is tenuous. Most active dedicated funds do have a strong relevancy to the program that they're supporting. And legislators put these in an attempt to get funding or more funding for a wide range of causes that they fear the current legislature or a future one will choose not to support, having other priorities. Too many are put in saying they will get funding from donors or grants or future appropriations, which never appear. It takes a lot of work to develop a donor stream or grants for something that perhaps should have been done by the state, or that people outside think should have been done by the state. This is kind of a warning that when our committee does get new dedicated fund requests, if it is not based on a specific fee or other or appropriation that's actually occurring or something like that, we need to look at them with a real beady eye, because otherwise 5 years later we're probably going to be repealing it because nothing happened. So dedicated funds in the rules fall under the purview of our committee, but the people who assign the bills frequently send them also to finance and sometimes to other policy committees. So sometimes those we get as a second committee, sometimes we never see until it gets to the dedicated fund committee. The dedicated fund committee includes senators and House members and has been pretty much chaired by the chair of Ways and Means over the years. I think once I chaired it, but then I appointed myself clerk and let Representative Major chair it because the spreadsheet gets done by the clerk. And it's a lot of extra work. So the committee is charged, I've said this part. This bill is the result of the second year of the second cycle and covers the Department of Environmental Services, the Lottery, Liquor Commission, the University System of New Hampshire, the courts, and the Department of Justice. In fact, it's a fairly slow-moving, the second year is a fairly light load, except for environmental services, which I was dreading, but they are really good at presenting themselves. Some of the departments are not. And it's pulling teeth to get them to figure out what they're doing and then put it back together again. So in the first cycle, we didn't have our act together yet. And this year we asked why we were treating the Liquor Commission, the Lottery Commission, and the University System as part of our review. They have separate audits and their cash flow goes directly to segregated funds. So they appear in what I call the telephone book, which is about that thick when you have it printed out and they hand us the printout on the committee, but everybody else looks it up online. These three, the two commissions and the university system appear in that book with $0 in, $0 occurred, and $0 at the end of the year, and practically no wording at all about their purpose and their funding. And that is because they do these separate extensive audits, which are separately reported. And in the past, we had simply removed the Seabrook Decommissioning Fund from the list of funds very early on because it was obvious that it's, I believe, received all of the monies that it needs. It cannot be touched for very obvious reasons that if we drain the Seabrook decommissioning fund and Seabrook needs to be decommissioned, that's a huge amount of money. So it is off the book from anything that we can or should do. But our new comptroller asked that similar funds and the lottery, liquor, and university system ought to be continue to be listed with an asterisk, which states why they are exempt from reporting as a dedicated fund. And that is sections 1 to 3 of the bill. We removed them from a number of places and established, if I remember correctly, an asterisk. Yes, on section 1, the following are exempted from the reporting and review requirements of 612E and 612J. And the section 4 repeals a fund that was set up to accept donations to the university system for scholarships, which were already being provided by the university system under its regular student aid. These were specific for the children of deceased firefighters and police that were killed in action, I believe. And the university system was already doing this, so nobody directed any donations to this fund. The university system kept doing it, and they said, why don't you get it away? I mean, why don't you remove it? I will say I expected there to be an amendment this morning, which I guess is going to have to be passed out later, because there was something left out in the final version of this, which I did not read carefully enough and compare with the spreadsheet notes. There is a section in 187A20A, Roman 2, which is dedicated Fund 278, which says that this fund is created and is doing the following work, and that needs to be removed since we're removing it from 612 and since it doesn't do anything. So that's going to have to, I thought that we had that coming out of, it should be coming out of drafting fairly soon. Jen 4 said she'd take care of it. So, but it's that kind of detail work that cleaning up our statutes that the Dedicated Funds Committee does most of. Section 5 repeals a fund set up for grateful citizens to donate to the cold case homicide attorney who works at Justice, or who should be working at Justice. I think the position's still vacant, but the man retired. In over 5 years, only one $100 contribution has been recorded, and the department was instructed by us to find a way to spend it on some cold case issue and thank the donor before this bill comes into effect next January, so that we could avoid having to send it to the general fund when the donor was told that this was going to be for cold cases. We spent 15 minutes discussing that, but and then section 6 is just the effective date, which is the beginning of next year to, I'm not quite sure why it's the beginning of next year. I can't remember. But that's it for the bill. And
Thank you, Representative. Would you be open to questions?
Yes. If
Representative
there are-
Ulrich.
Thank you, Madam Chair. Thank you for taking my question, Representative Almy. So just to distill this down, this gets rid of redundant funds
Right.
or disused funds or unused funds. This only is removing. It's not adding or,
It's not adding. What it does do sometimes is to get, last year the year before last, we had done this, to get the departments to say, oh, we've got this money here. Why do we still have that money here? How can we best use it? And 2 years ago, we got safety, I believe it was, to take the money that they had in two separate funds that had been accumulating gradually over the years and was no longer receiving money to spend in a version of the program that they were supposed to be doing that will essentially create a base for the future without having to spend any more money.
thank you, follow up, Madam Chair.
Follow up, and then Representative Plitt.
Thank you. Just line 19, paragraph 5. Since I was co-sponsor of the original bill, and I know that this was put in specifically at the request of numerous individuals, you're now telling me that $100.
Yeah. Yeah, that's what happened. Unless
Do you have a question?
at least one individual feels strongly enough that they dedicate a lot of their time to going out and getting people to provide contributions, they don't do it.
Thank you, Madam Chair.
Representative Plitt has a question.
Thank you. I understand this is essentially a housekeeping bill to continue a review. Okay, good. You raised my eyebrows with the Seabrook Fund. I thought that was at a federal level. So are there two funds, one federal, one state?
Well, the state was responsible as I mean, this was back about 10 years ago when we discussed this. So I'm not quite sure of my facts, but I think that this is the sole decommissioning fund, and it is in some way on the state's books. And the state assessed, as I recall, on the nuclear plant for years and probably still is assessing it a little to make sure that there is sufficient money in there to do the full decommissioning, as has been done for Vermont Yankee in the last few years.
Picked up on that, 'cause my life has been in the utilities industry.
Thank you.
Other questions? Yes, Representative Pillsbury.
Thank you, Madam Chair. So I think this is obvious. I just want to be absolutely sure. There are only two funds that this bill terminates, and that's in Article 4 and 5, those two
Yes.
repeals.
This year, that's
every-
the least we've had for quite a while, actually.
Okay, so everything in our sections 1, 2, and 3 is purely for the purpose of exempting reporting requirements. That's the thrust of the bill. Right? Okay. When you do your amendment on page 2, line 17, you could delete relative to where it appears twice.
Excuse me, what was that?
Page
Because the
t-
amendment's already being done.
Yeah, page 2, line 17 has a redundant phrase.
Relative to. Yes, it does. I don't know if we can get that deleted. I'll try.
Thank you.
Question from me, if you just to be sure, this amendment will be completely germane to the original bill.
Yeah,
Okay,
yes,
Great, thank you so much.
definitely.
Representative Rochford has a question.
Yes, thank you, Madam Chair. Thank you, Representative Olney. Just understanding the liquor, lottery, and university system are part of this exempted reporting because they're doing their own audits anyway. There's something about the fish and game in there. are they auditing themselves? Are they doing audits as well? Because I see that they're exempted as well.
Yeah, and this was done, who was exempted got pulled out of the files by the comptroller. The Fish and Game Fund, I would like to see their audits, frankly. I've never seen a Fish and Game audit. And they have a very complicated series of, which is less complicated than it used to be, of sub-funds that we do get to take a look at, but, or we have gotten to take a look at. But they have this general overall fund that I was on Division 1 in finance 20 years ago, something. And we did have Fish and Game in our purview, as I recall. We certainly had to fight about their bills. And I don't remember us spending very much time on their fund at that point, though later on it turned out that the Fish and Game Fund was being very the management was very difficult. Let's put it that way.
Representative Ullery, if there are no other questions. Yeah. Let's go around first time first. So Representative Fellows.
Thank you. I'm just trying to understand what I'm looking at here, and on that Fish and Game issue on line 10, that's an account where they put money received from fines and some kind of penalties. So my question is the intent to eliminate that account so that if somebody were to ask the question, how much revenue did you bring in from fines, they would not be able to answer that question?
It does not eliminate the account. What it does is it will say with an asterisk, this is exempted from the reporting and review requirements of 612E and 612J. I would have been, and 612E and J are the dedicated fund review. Where it is reviewed is as the Fish and Game Fund inside of finance. And the accounting that has to be done separately by the auditors that do the CAFR continues, and the finance responsibility continues. But the only thing that the dedicated fund committee has seen is the 000 charts, because the fund is considered to be off book by the accounting departments.
Follow up.
Yeah, so I thought I understood until you made that last comment. So all of these funds have balances of 0, or they at the end of the year they have
only
a balance
for the
'cause-
dedicated funds purposes. They are accounted for separately under the state accounting system, and they are audited separately during the CAFR audit, the comprehensive financial annual financial
Thank you.
review report, whatever it is.
Any other first time questions? Okay, seeing none, Representative Ullery.
Thank you again. Representative Almy, you may remember what happened with Liquor Commission back in 2010 and 11, and the commission that former Representative Ober ran, because the Liquor Commission didn't bother to do any accounting, in essence.
I don't think it was that bad, was it? I'm trying to remember.
It took a subpoena from the commission to get them to give us any information, because they said they weren't a state agency. But that's one of the reasons that this was put in there. Are you now saying that they are, under the reorganization, actually providing information? in an accounting fashion that can be seen either by the public or legislators.
Well, I'm saying that they are providing no information to the dedicated funds commission. What I need here is the comptroller to explain herself. And I don't know if we'd want to call her for a work session. It might be good to clarify
Okay, yeah, that might
this.
be helpful to do a follow-up on that. Okay.
Thank you, Madam Chair.
Thank you.
Representative
Thank
Holmes.
you for your testimony. Are there any other pink cards for House Bill 297?
Could I just make a comment? This
Yes.
is the most questions I think we have ever had on this.
Okay, some of us are still learning about this, so we'll do a little work session as a full committee to learn a little bit
Madam
more.
Chair, but just
Yes, Representative Ames.
before you close this, I think maybe a word needs to be said that all the work that Representative Almy has done over the years has been complemented, and she's been in partnership with Representative Major, who together they've done extraordinary work in pulling together information that just wasn't attended to in the past and cleaning up, a series of accounts that needed to be cleaned up. So I think that should be on the record. Thank you.
Well said. Thank you very much, Representative. And with that, we will close the public hearing on House Bill 297. Okay, we'll now open up the public hearing on House Bill 450 and recognize the prime sponsor, which is Representative Schamberg. Who is he? There he is.
If you will have noticed, Madam Chair, I've graduated from 2 crutches to 1. The doctor said I can do away with my walker and the 2 crutches and move out of kindergarten to primary school by using 1 crutch now. So, and in 3 weeks or so, he'll put me on a cane. So, okay. Thank you, Madam Chair and House Ways and Means Committee members for this opportunity to present House Bill 450. I am Representative Tom Schamberg, Merrimack County 6. I represent the towns of Wilmette and Sutton. House Bill 450 is an act relative to removing the net operating loss, NOL, deduction limit on taxable income under the Business Profits Tax, BPT. For those new to some of the issues that come before this committee, the net operating loss made its appearance here last session. Historically, in 2014, a commission to study business taxes was formed that included the study of the carryover and deductions of the net operating loss to assess its tax policy in order to maintain a balance between competitiveness and revenue. The 3 criteria used to measure the competitiveness of each state's corporate tax base are given equal weight. 1, the availability of certain credits, deductions, and exemptions. 2, the ability of taxpayers to deduct their net operating loss. And 3, a host of smaller tax base issues. The federal corporate income tax and New Hampshire's business profits tax is designed to tax only the profits of a corporation. However, a yearly profit snapshot may not fully capture a corporation's true profitability. For example, a corporation in a highly cyclical industry may look very profitable during the boom years, but lose substantial amounts during the bust years. When examined over the entire business cycle, the corporation may actually have an average profit margin. Examples of cyclical industries, those are things you can live with or without, are travel, construction, hotels, luxury goods, airlines, etc. The non-cyclical industries, things you probably always need, are utilities, healthcare, consumer staples like toothpaste, soap, etc. The deduction for net operating loss helps ensure that over time, the corporate income tax is a tax on the average of profitability. This is especially true for New Hampshire businesses that suffer losses either from starting up or during tough economic times. Without the NOL deduction, corporations in a cyclical industries pay much higher taxes than those in stable industries, even assuming identical average profits over time. Simply put, the NOL deduction helps level the playing field among cyclical and non-cyclical industries. We here in the House Ways and Means have tried to provide an optimum business tax climate for New Hampshire. In the past few years, there have been a lot of tax legislation, all under the heading to promote our New Hampshire tax advantage and improve our business climate. And the examples include a decrease in business tax rates, single sales factor apportionment, market-based sourcing apportionment, and increased filing thresholds. I have heard members of our legislature speak ill of the tax laws made in Washington, D.C. that affect our residents and businesses. The Tax Foundation has rated the New Hampshire business tax climate concerning the New Hampshire NOL as some of the worst in the nation as to corporate taxes. Here we are trying to promote the New Hampshire tax advantage, yet in 2021 through 2022 session, the legislature voted to only allow up to 80% of the federal taxable income as the cap on NOL deductions by conforming to Section 172 of the IRC in effect on or after December 31st, 2018. This change is not a great climate for small businesses or startup businesses that often lose money in the first few years. We are taxing them with the BET, but now are also limiting their NOL deductions, which can have devastating effect in their short and long-term viability. From 2020 Business Profits Profile, the U.S. Business Administration Office of Advocacy, the state of New Hampshire had 136,535 businesses, or 99% of the small business makeup in New Hampshire. They employed 300,628 employees. The small businesses of New Hampshire are crucial. The DRA interprets the change to the 80% limitation of the NOL as follows: a reduction in net operating loss deduction taken by the taxpayer increases tax revenues for the state. I see this as a tax and a tax increase upon the taxpayer, the businesses of New Hampshire. The solution to this tax increase is that the House Ways and Means Committee should not force the New Hampshire business community, especially the small businesses and the startups, to pay their BPT before they fully utilize their NOL deduction carry forwards, as has been allowed by the law up until 2022. This bill, for BPT purposes, does not change the carry forward of 10 years, which most states allow 20 years. And secondly, the amount of NOL generated in a tax year that can be carried forward may not exceed $10 million. This bill only asks that the NOL deduction up to 80% of taxable income be changed. Thank you, Madam Chair. And I'm going to let the next expert handle the technical questions I'm sure are going to be coming from this group. And that's Jim Usilio.
I don't have any more pink cards, so if they're out there, please send them my way. Okay, can you send that up for me? May I ask you a question, though?
Madam Chair, you can always ask a question.
Thank you so much. I have requested some legislative history from our researcher, but can you, in a nutshell, explain where did this bill get passed? Was it as a House bill, a Senate bill? When did it happen? Because this never made it to my radar, the change to conform with IRC.
Madam Chair, I have a little story to tell you.
Okay, please do.
All right. First, it was voted and approved here to have the change, and I was the only representative that voted against it. It then moved forward to the House, and it was almost the last bill of the day back in May or June, I believe. And I had made my presentation. The opposition came up and said, it's a 19-1 vote. Let's vote. And I did make this presentation during that time period. So that's when it happened.
Thank you
And you
very
were in the
much.
front row, I think, somewhere. Okay?
Thank you so much.
You're welcome, Madam Chair.
All right, Mr. Usuego, could you please come on up? Thank you.
Well, good morning. My name is Jim Uselio. I live in Hollis. And as Representative said, I think I'm really here to help illustrate the issue and, give you technical guidance. I'm not sure how much history you want on this issue or just jump into the example. I think I probably should take a few minutes to go over the history just a tad. So again, when we say net operating loss, that's a business's deductions over their income. And so often what happens is a business will, either during a down year, recession, or maybe in a startup year, they often lose money. So they may have a loss in one year and income in the next year. And so when a business files a tax return, again, they pay taxes on their income. And so this net operating loss deduction under the Internal Revenue Code, and I think probably every state has one, is really a means to kind of take into account that businesses' income goes up some years and down some years. And so the NOL is meant to kind of smooth that over. And so this, I'll call it a glitch, if you will. You may know that under the BBT we use, our reference to the Internal Revenue Code changes every few years, and right now we use the 18 code, and that's in figuring out gross business profits. The and the gross business profits is before the net operating loss deduction. So you start out with gross business profits, you have some adjustments, you apportion your income, and then you basically layer in the net operating loss deduction. And so the net operating loss deduction had always been, well, at least since 1996, it was tied to the 96 Section 172, which basically just meant when a business calculates their income in New Hampshire, they follow the 18 code for the gross business profits. But then in this quote, when it's net operating loss deduction, they follow the 96 code, which again just says basically you can deduct your NOL. And so, last year, when this reference to in 77A4 Roman numeral 13, it used to say that the as you can see in the bill, it references 172 in the Internal Revenue Code. It used to say 172 in effect in 1996, and that's important because under the Tax Cuts and Jobs Act in 2017, when under the federal law we had a whole bunch of tax cuts. One I'll call a revenue raiser was limiting the amount of the net operating loss under federal law. And so basically what that meant was a business that has NOLs that they used to be able to utilize against their income, they now had this cap. They just put in an 80% cap. And so by us adopting for 172 purposes the 18 code, we've now conformed to that provision. And so we're stuck with that unless we kind of decide we don't want that anymore. And again, that could change if the federal government says, well, we're going to cap it at 50%. We'd be tied to the Internal Revenue Code. So it's really what you want to do. I'll also say under the same Tax Cuts and Jobs Act in 2017, when they put in this 80% cap, they also changed the carry forward period, how long a business can use their net operating losses, from 20 years to an indefinite carry forward provision. And so that's important. At least they did that, right? They put in a cap, but they said, we'll let businesses carry forward their NOLs indefinitely. We would have adopted that as well because we're adopting the 18 code for 172 purposes. But the reason why we don't adopt that provision is when you look at our statute under 77A4 Roman numeral 13, we explicitly have a 10-year carry forward period, as well as we have a $10 million cap. So we have these other, I'll call, less than favorable issues. And And so at least under the federal law, not that I would advocate it, but again, when they put in this 80% cap, again, they changed the carry forward from 20 years to indefinite. We don't adopt that because we explicitly have a 10-year carry forward. So we're not only getting stuck with the 80% limitation, we still have this 10-year carry forward and we still have a $10 million cap. So that's really just some context that I think is important. But I don't want to kind of lose sight of the big picture here, which is how this law is going to work going forward. So I think the best thing to do is let me walk you through an example, and then I think it'll help illustrate the issue. And so my example, it's pretty basic, but I really wanted to drive home the point here. Excuse me. So if you have a business in New Hampshire, and in year one, maybe it's a startup company or not, but if you have a business, it could be small or large, and it loses money. So my example, I have two examples, I should say. The first example is how the law used to work right up until 2022. So it changes in 2022. And then the second example is how it now works going forward. And so if you have a company that loses $300,000 in my example in year one, and then make $150,000 over the next 3 years, you can see cumulatively that they would make $150,000 over a 4-year period. Now just kind of step back. And so what the NOL deduction is meant to do is it says, okay, in year one, a business loses money. It could lose $100,000 or $300,000, whatever the number is. And then in year two, it starts to turn the corner. Things get better. So it makes a little bit of money. So it makes $150,000. So what the law had always been was, okay, well, because income goes up and down, we'll let that business take that $300,000 loss and carry it forward until they use it. And then they'll stop paying taxes. And so in 2022, under my example, they can use 150 of that $300,000 loss. Next year, they make another 150. So as of the end of 3 years, they're break even. They use the remainder of that loss, 150,000. Now they have no more NOL deduction left. And then whatever they make, they pay taxes on. So they make 150 in 2024 and they stop paying taxes. That's kind of the big picture. And to me, that makes sense because that business isn't starting to pay taxes. Instead, they start making a cumulative amount of money. I mean, it would be really unfair that you sit there and say, okay, well, if you lose $300,000 in year one and you make $150,000 in year two, you're still down. You still lost money since you've been in business, but we're going to make you pay taxes. That's what the law change does. And you can see that in the second example. What now happens, and you can see under example 2, I put in bold the lesser of. Those are the key words. That same business loses $300,000. In the year two, it starts to make some money, so it makes $150,000. Now, unlike the first example, they can only deduct. That deduction is limited to the lesser of the carryover, so $300,000, or 80% of their income in that year. So 80% of the income in 2022 is $120,000. So the lesser of is $120,000. So they can only deduct $120,000, even though they have a $300,000 NOL sitting on their books. They can only, because the government said we're going to put 80% as the cap, they can only deduct $120,000. So they end up paying tax on $30,000 in year two. Again, you have a business that it could have lost $1 million in year one, make $50,000 in year two. This is going to make them start paying taxes in year two, even though they just lost $1 million and they make $50,000 in year two because they have this cap. And so if you just do that math across, in year three, again, so now they had a $300,000 NOL, they used 120, that leaves 180. Same thing, the lesser of 120 or 180. Well, it's 120. So then they pay taxes again. So at the end of year three, they've only broken even, yet they've paid taxes on $60,000 of income. And then in the year four, they use the remainder, and the remainder is 60. And because 60 is the lesser of the cap of 120 in my example, then they get to use it all. So you can kind of just see, in both examples, they use the $300,000, but it's capped in the second example. So they have to use it over a longer period of time, and they start paying taxes earlier. So that's really the takeaway here, that I guess it's kind of a fundamental question. Is that what we want? That a business loses money, and then it can lose $1 million, and then it makes $10,000 the next year. They're going to have to pay taxes on that $10,000 because they can't use all their NOL. And so, again, it could change. It's 80% now. If the IRS says it's 50% or 90%, we'd be tied to it. So the bill basically just strikes this limitation and goes back to the way it used to be. I also just wanted to point out, and I'll let the DRA speak to the fiscal note, and I don't know how the DRA calculated it, and again, I don't want to speak for them and they can clarify it, but I'm not sure if they took like the total amount of NOLs on the books and then multiplied times 80% and use that as kind of a base. But to me, there's no issue here at all, really. I mean, I know maybe it's prudent to try to have a worst case fiscal note, but I don't even think, and I would understand that, but I don't even think it's realistic at all. Because if you just think about it, first of all, I think the DRA would agree, this is the cap. So of the population of NOLs in the state, a lot of businesses, this isn't even going to matter because they're going to be under the cap. If a business loses $50,000 in year one and then makes $500,000 in year two, they're going to be under the cap. The cap's not going to apply because 80% of 500,000 is 400,000. So they're going to be well under the cap. So by just looking at the NOLs on the DRA's books, some population isn't even going to be affected by that at all because they're already under the cap. It's only if they're subject to the cap because of where the income is, like my example. And in that case, it's just a timing issue. You can see how it just plays out. It's whether you use it until you start making money again, or you just put a cap on it and you stretch it out longer. So it's a timing issue. It's not a permanent issue. And again, I know no one can project taxable income and all that. It's kind of a shot in the dark, but it's not a permanent issue. That's really the key point here. It's a timing issue. It's when the state's allowing a business to take their NOLs under example one, how it used to be, or now to this cap. So I think that's really everything that I had, and I'd be happy to answer any technical questions or any questions at all.
I actually have a question because we don't operate in a vacuum here in New Hampshire. So what are other states doing? Did everyone else align with the new IRC code, or?
Yeah, it's a good question.
Thank you.
I would say it's all over the place. I mean, again, we're tied to the 18 code. Many states have a rolling conformity, so they're tied to the most recent code. So this is at the 18. There's been changes since the 18 code. We had the CARES Act that's changed things. But again, so that's one factor that they're tied to different codes. I'd say some states are adopting it, and then some states are not adopting it, decoupling from it. I'd also say that, again, other states don't have a $10 million cap. They also don't have a 10-year carry forward. So if they're going to adopt the 80% cap, then they're probably adopting the indefinite carry forward provision because it's part of the same Section 172 under the 2018 code. It's the same thing. So it kind of is all over the place.
I see some hands up over here. Representative Ames, did you have a question?
Thank you. Thank you for your testimony. I'm wondering also, this is a follow-up from the chair's question. I'm wondering also about what Congress said when they chose to provide for an indefinite period as well as an 80% limitation in support. There's usually a committee report on changes like this, and whether you've seen that, whether you could provide that to us, it would be helpful to have background on why they made these choices.
Right. I can't speak to that. Maybe I can find the committee report. Right. Again, my own kind of what I've read is basically many people saw that as a revenue raiser because the Tax Cuts and Jobs Act of 2017 largely decreased taxes. And so this raised revenue. Again, I guess it stabilizes the revenue source for a state, right? Because if you look at my example, again, everything else being equal, it's great for the state because they get this profit coming in and taxes being paid a lot earlier than they would otherwise be paid. And so that's really, to me, the fundamental question. You can see under year two in 2022, you're making this business pay taxes on $30,000, even though cumulatively over the 2 years they've lost money. That's kind of the fundamental question. The state will otherwise get it. It's just a matter of when. It's after they use their net operating losses in order versus having this cap. Yeah, and as far as the indefinite carry forward provision, again, I'll see what I can find. My kind of take on that was it was kind of part and parcel of that. They put a cap on it, but they loosened their 20-year carry forward to indefinite. again, we would have otherwise adopted that, but we have a specific provision that only says a 10-year carry forward is allowed.
Other questions? Yes, Representative Spilsbury.
Thank you, Madam Chair. You mentioned that Congress has made further changes in the Internal Revenue Code since 2018, but have they made any changes regarding the NOLS?
So, I mean, yes and no. So this 80% is still what they did. Basically, was they put this in place as of 2017, so it was going to be the law as of 18. But then we had the pandemic, and so when the pandemic hit, they had the CARES Act, and so for 18, 19, and 20, they temporarily suppressed the 80% limitation. They said it was 100% again for those 3 years. Now in 2021 forward, it's back to 80%.
So the law currently is the same as what we've adopted last year by conforming to the 18 code.
Right. So now because we're in 2022 year, it's 80%. Right.
Okay, thank you so much for your testimony. Sure. Sorry, Representative Almy, do you have a question?
Do you remember, this came from the Senate. Do you remember how they were, why they were defending this in particular, and or how they did it here, which I'm afraid I've forgotten?
So I'm going to go on a limb here. So what I recall was, right, so this was Senate Bill 435. So this was the bill that fixed the apportionment issue, which was a great fix. In that, when that bill language changed, I think, I don't know, maybe it just inadvertently, they saw a 1996 reference date to Section 172, and someone just struck it. And that had an impact. Maybe it wasn't recognized immediately, but anytime you change the reference to the Internal Revenue Code, it's going to have an impact. And so that was kind of a lesser fallout. And so it just wasn't the focus of the bill. The focus of the bill was to fix the double apportionment issue.
Follow up?
Just to the chair, I remember having this particular argument last time, and then 19 of us voted the way it went. I don't remember any more than that. If we have records that we could look at, or if somebody behind us is going to talk to that, that would be helpful.
Absolutely, we will ask for that. Thank you so much. I don't have any more pink cards. We do have someone here from the DRA. Did anyone want to ask Keen Wong some questions? Yes. If you could just fill out a pink card when you get a moment.
Good morning. My name is Keen Ming Wong, Tax Policy Counsel from the Department of Revenue. We prepared the fiscal note for this bill, and the department does not have a position on this bill. I'm here to answer any questions that the committee may have.
Representative Fellows has a question.
Thank you. When I look at this, I'm new on this committee. I don't know hardly anything about this, but it seems to me, just logically, the reason for having a cap of 80% or some kind of cap has to do with trying to manage your revenue streams, because that prevents, with the 80% cap in there, it prevents your revenues from taking a really drastic dip in some year where many of the businesses might be impacted, COVID or it didn't turn out that way with COVID, but something could happen that would cause that. Is that the rationale that would be used to have a cap versus no cap?
I believe.
And I'm not talking about the period, just
Yep.
the cap.
Yeah, I believe that that could be a reasonable reason for that because as you explained it, when there's an 80% cap, as the previous testimony as well, the businesses will not be able to claim the maximum 100% for that particular year. That remaining carry the remaining unclaimed NOL that that's not claimed for that particular year will be carried over to the next year for claim. If there's taxable income in that for that next year. So in that first year, the impact on revenues for the state would not be as drastic. Yes, you're right.
Representative Almy has a question.
Thank you. So, given what actually happened where the federal government bailed us all out and most businesses got back on their feet a lot faster than we were anticipating, did this 80% would have artificially increased our revenues?
I wouldn't. I'm not because that 80% is for tax years 22 onwards. So that impact has not been seen yet, though.
Uh-huh.
Other questions from the committee? Representative Pillsbury.
Thank you, Madam Chair. Would you agree that the effect of the 80% limit is basically to help smooth out the cyclicality of both the tax burden of the corporate taxpayer as well as the revenue of the state of New Hampshire?
I believe that it's more of the latter, like what Representative Fallows was alluding to, that it sort of smoothens out the effects on the state revenue side. But as the previous testimony mentioned, I think since on the business side, if the taxpayers were able to claim the full amount for that first year, they'll just claim the full amount for that first year. So there's probably no, I guess. Then that 80% would stretch it out in that way. Yes.
Okay, thank you very much.
Okay. And I just also wanted to point out during our fiscal note when we prepared it, just wanted to point out that if this bill was to pass, there was some language in there that we felt that to apply the 80%. The removal of the 80% limitation to other business organizations other than the C Corp. So I think that additional language needed to be included in the bill as well, so that all business organizations, no matter what form, would enjoy that elimination of the income limit, that cap.
Representative Janigian.
Thank you, Madam Chair. Thank you for taking our question. So you are saying right now, the way the bill is written, it's not covering all businesses.
That is our read on the current bill. Yes, it's only for C corps right now, and then
Follow up?
That was my fault. He
Oh, okay,
answered my
you got it.
follow-up.
Okay, good. Awesome. All right, yeah, Representative Orrs.
Thank you, Madam Chair, and thank you for taking my question. So with this change, does it impact taxpayers that do not own businesses?
So right now, as it's written, it's only for C corps. So
Right, but I'm saying, does it shift, what I'm asking is, does it shift the tax burden in any way?
it does not shift the tax burden. No,
Okay.
it's only so each particular taxpayer would have their liability, and it won't shift that burden to another taxpayer. I'm not sure if I'm answering your question.
No, you've answered it.
Okay.
Thank you.
Representative Alvey.
Thank you. But if you're a startup and you registered as a C Corp
Mm-hmm.
and you lose 300,000 the first year
Mm-hmm.
and the second year you make the 150 and Celio's example, and you have to pay 30,000 on 30,000 in taxes. On hasn't that shifted a burden to you because you're going to have to borrow that money too if you're still starting up?
I guess in my mind, the shifting of burden is shifting the tax burden from one taxpayer to another taxpayer. I think in your example, Representative, there's only one taxpayer. There's no shifting of burden from one taxpayer to another taxpayer. So I'm just not.
Okay.
My
It's
apologies, I'm
shifting
not
it
getting the
from
question.
the state to
Okay.
Okay, thank you very much.
Thank you.
I see our researcher here. Were you able to look up the history, the recent legislative history on this topic?
Can we put it on the record?
Would you mind coming up and so we can hear you a little bit better? Thank you.
The bill that passed last year was SB 435 relative to the net operating loss carryover under the business profits tax. And I have the bill and the DRA's fiscal note quick guide along with the majority and minority reports that I could produce copies for the whole committee if that would be helpful.
Thank you. That would be helpful for us to just refresh our memories on what happened.
Absolutely.
Okay. All right. Is there anyone else who would like to speak on House Bill 450? Yes. The former Senator Bragdon, do you have a pink card? Excellent. Thank you.
Thank you, Madam Chair, members of the committee. For the record, Peter Bragdon, recovering state senator, here representing the Greater Nashua Chamber of Commerce, of which Mr. Usiglio is a member. And just for some background, the discussion prompted this in me that the Senate Bill 435 was an important business bill last year that dealt with a double apportionment issue, which I don't fully recollect and understand. I understood it at the time. I do not now, but I do recall it was a significant hit to businesses that were basically paying more than they should have to pay. So the key thing for all business groups, including the Nashua Chamber, was the double apportionment issue. And so when it was discovered at some point in the process that by switching to the 2018 code, it also affects this carry forward that Jim explained, it was kind of like, almost like it was too late. You know, we don't want to stop this train because it's so important to fix the double apportionment problem. And that was part of the reason I think it was so close to the end. So the underlying bill, I think it was Senate Bill 435, was a very important business bill and we all supported it. But it seems to have this other consequence as well, which is being addressed now. So I hope that helps provide some context.
So just to be clear, does the chamber support this bill as is, or would you also recommend that we extend the 10-year, extend the cap?
The chamber has taken no position on possible changes to it, so definitely supportive of the bill. And I think it was pointed out it may only apply to certain companies, and obviously would want it to apply to any company. So happy to answer any questions.
Representative Almy and then Ullery.
Thank you. That was very helpful. You've triggered some memories for me.
Oh.
Can
Hate it
you,
when I do that.
do you remember some kind of faint idea of leaving this part of it in would reduce our revenue hit?
No, my recollection was, we didn't realize that was included as part of what we're doing, but it's too late to fix it, and we don't want to derail the train, which I completely understand that. It was a very important change that was made.
Representative Ullery.
Thank you, Madam Chair. Thank you for taking my question, Senator. The question is, under this bill, it would look like a startup business, or actually any business that would have a net operating loss, would be hit with a tax burden when they were least capable of meeting that tax burden. And yet the Chamber of Commerce is in favor of hurting businesses?
I don't know that I understand the question, Representative. The
May
chamber
I?
supports this bill.
Go ahead.
Thank you, ma'am. Well, the way this bill looks is that if they have a net operating loss in the first year, then they have a net operating loss in the second year as well as they're developing their business. or they're recovering from a downturn in business cycle for whatever reason, they would still be only able to apply a certain amount of their money up to the cap, and then would be held liable for a tax burden on top of that, even though there was no real profitability of the company. If
Thank-
I'm reading this
Thank
correctly,
you,
at least
Representative. I
from-
do not read it that way. I read it as a company will not have to pay taxes on profits until such time as they actually make a profit cumulatively. It's more of a cash flow issue for especially small companies, and to be able to have to pay taxes earlier hurts the small businesses. So I don't agree with your understanding of the bill, although I am not an accountant, unlike Mr. Useglio, but that's my understanding. And that's the chamber's understanding.
Great. Thank you for your testimony.
Thank you.
I'll send a card in.
Thank you. Okay. Is there anyone else like the CPA Society who would like to speak on this bill? Nope. Okay. Seeing none, we will close the public hearing on House Bill 450. Okay. What do we have for 288? Do you have 288? Oops. I currently do not have any pink cards on House Bill 288 other than the DRA.
Really?
Is there anyone here to talk about that?
Madam Chair, do you want me to introduce?
Yes. We will now open the hearing on House Bill 288 and recognize Representative Almy to introduce the bill.
Thank you, Madam Chair. I will fill out the pink card right after this. I am introducing House Bill 288 FN relative to taxation of sole proprietorship businesses. And I will take no questions because I don't think I agree with him.
Is there anyone else here who would like to say anything about 288? Then I will recognize Keen Wong from the DRA, see if he has some intel for us.
Good morning. My name is Keen Ming Wong, Tax Policy Counsel from the Department of Revenue Administration. The department does not have a position on this bill. The department did prepare a fiscal note on this bill, and I'm here to answer any questions on that.
Do you want to just give us a high-level overview of your note, and then we'll see if you have questions?
Sure.
Thank you.
As we understand, this bill is to treat the single-member LLCs and sole proprietorships as not business organizations, and therefore exempting those two types from BPT as well as BET. The department prepared a fiscal note impact on this. The department has not performed a detailed analysis on the constitutionality on this bill, but initial thoughts are it could be unconstitutional in terms of treating, creating a different class of taxpayers.
Representative Ellery.
Just for the edification, this is the beginning of the term, and there are some individuals. Could you refresh my memory on the deduction or the filing point, the threshold of filing for the class of a sole proprietor or a single person LLC?
For New Hampshire business taxes, there is no distinction between the filing threshold for a single member LLC or sole proprietorship versus C corps or any other corporations. The filing threshold for tax year 22 for BPT is $92,000 for gross business income, and for tax years 23 through 24, because of the inflation adjustment that's done, the gross business income limitation was $103,000. And then for business enterprise tax, the limitation, the gross receipt limitation, as well as the enterprise value tax base for tax years 22 was $250,000, and for tax years from 23 through 24, also with the CBI adjustment, is $281,000.
Madam Chair, just a little follow-up.
Follow-up.
And that also applies to a sole proprietor.
Yes,
as
it
we're
applies to
concerned.
all.
Anyone who's doing business in New Hampshire has that entry threshold.
That is correct.
Thank you, sir. I appreciate that.
You're welcome.
Representative Almy.
Thank you, Madam Chair. On Mr. Wong, I sent you a request for information on what you did as a fiscal note was solely on the BET, I believe.
The fiscal note was done solely on 1040 NH1040 filers, because the way the filers, the way taxpayers file their returns, the business tax returns in New Hampshire, if it depends on the for single member LLCs anyway. So for sole proprietorships, they'll file a 1040 NH1040 for BPT, and then a BET for their BET returns. For SMLLCs, it depends on the member, the type of the member. So if the single member LLC, the single member is a partnership, then that SMLLC will file a NH1065. There's no checkbox to say, okay, to identify that this return is a single member LLC filer. And then if the member, the sole member of the SMLLC is an individual, then the return that's going to be filed will be an NH1040. And once again, there's no checkbox to indicate on that return. So that's why the fiscal note is only limited to NH1040s.
Follow-up.
But does that mean that we don't have information on whether these same individuals earned enough profit that they are also paying BPT?
For the question that you asked was earlier in the email was for BET filers, were they also filing BPT? And we did find that in the
Most
reply
of them.
email was like 2,500 of those BET filers who were sole proprietors, BET filers, also had BPT liability out of the 13,000. Yeah.
So you're now saying it was, sorry, follow up. You're now saying it was only 25 people had a BPT liability?
2,500.
Oh, 2,500. Okay. That isn't clear, I think, in your response to the email, which I've copied to everybody here.
Yep. So there were 13,000 BET filers who were proprietors, and there were also about 13,000 of them also had to file a BPT return. But from that BPT return, not all of those had a BPT tax due. Only 2,500 of that had a BPT tax due.
Thank you.
Okay. Thank you very much.
Thank you.
Okay, are there any other folks that would like to come speak on House Bill 288? Okay, seeing none, we will close the hearing on House Bill 288, and we will take a little bit of a break before we go into exec session so we can get a little bit organized. So why don't we come back in about 10 minutes? We'll now open the executive session on House Bill 60, and the chair will recognize Representative Janigian for a motion.
Thank you, Madam Chair. I make a motion to retain HB 60.
Is there a second?
I second.
Great. Would you like to speak to your motion?
Yes, thank you, Madam Chair. So I think on this bill, we need a little more time. There was the day it was introduced, the author mentioned that a constituent was not available, so we don't have all that testimony. And I think there's also, we need to just look at how this could affect the state. Does this affect tourism in some way? Yes, other states do have different fees for different, whether someone's out of state, but does that mean New Hampshire needs to follow suit? Is that what we want to do? So we need more time to study this.
Other discussion? Wow, that was quick. Before we call the roll, I just want to welcome and introduce you to Riche Coulombe, who is here filling in for Representative Hines, who could not make it. Welcome. Okay, clerk, are you ready to call the roll? The motion before us is retain House Bill 60.
I am ready to call. I'll start with Representative Janigian.
Yes.
Representative Ullery. Yes. Representative Doucette.
Yes.
Representative Spilsbury.
Yes.
Representative Platt votes yes. Representative Colcom.
Yes.
Representative Sauty.
Yes.
Representative Orris.
No.
Representative Rochefort. Representative Almy.
Reluctantly, yes.
Representative Ames.
Yes.
Representative Southworth. Not present?
Not present.
Okay. Okay, Representative Malloy. Representative Schomburg.
Yes.
Representative Fellows.
Yes.
Representative Bolton.
Yes. Yes.
Representative Elberger.
Yes.
Representative Leapley.
Yes.
Representative Smith.
Yes.
And the chair.
Yes.
Okay, the vote is 18 to 1 not present.
Okay, the retain motion doesn't actually go to the floor. It just means that we keep that bill in committee and that we will work again on it in the fall. Okay. Great. And we will close the executive session on House Bill 60 and now open up the executive session on House Bill 121, and the chair recognizes Representative Almy for a motion.
Thank you, Madam Chair. I move to retain HB 121 relative to worldwide combined reporting for unitary businesses under the business profits tax.
Is there a second?
Second.
Representative Platt seconds the motion. Representative Almy, would you like to speak to your motion?
Yes,
Thank
thank you. This bill could be extraordinarily important for New Hampshire and for the country eventually. But we need the results of what's going to happen in the commission that has been delayed by not being properly staffed yet. We need the staffing to be completed quickly and then to allow that commission to go to work over this summer so that we will be able to tell exactly on what it, well, we will be able to estimate what it does to our state's economy and to our state's tax system. Thank you.
Other discussion. Representative Ames.
Thank you. You mentioned with respect to the bill we just retained, House Bill 60, I think, that we'd retain bills like it in the fall. I understand that, but I suggest in this case it would be well to revisit what's happening before the summer, so that if there continue to be delays in the work that I think most of us feel feel needs to be done to dig into this complicated issue, we'll at least know that it's not going where it should be going, or it is, before it gets to be too late.
Representative Schamberg and then Representative Ulrich.
Well, thank you, Madam Chair. Some of you may find what I'm going to say is confusing, as I am part of the Worldwide Combined Reporting Commission and prime sponsor of House Bill 121, which I presented to this House Ways and Means Committee on January 17th. My position on this bill is counter to what was discussed about retaining House Bill 121 to let the commission do its research and hear the public presentation by experts on both sides of the issue and listen to the domestic companies' views about advantages and disadvantages. This position I'm taking on this bill today is not a reflection on my good friend from Charleston, serving as chair of this commission, who has undertaken trying to populate and move this commission forward. Even before Representative Spilsbury was elected chair, the Honorable Patrick Abrami, who was elected as the first chair but was unfortunately unseated in the as a New Hampshire state representative in the last general election, made many efforts to populate this commission per RSA 78-A:23-B. Representative Abrami spent 2 months trying to initiate the formulation of prospects for this commission, though it was not his responsibility. Even though the effective date to report the commission results to the legislature is November 1st, 2023, there are still 6 unpopulated seats to fill on this commission. None of these empty commission seats is the responsibility of the new chair of the commission. For the past 6 months, there has been no movement by those responsible to nominate and populate the commission. As a member of Ways and Means Committee and prime sponsor of this bill, I take this position very seriously when it comes to tax policies. By just allowing the uncertainty of populating these seats on the commission to drag on, I don't want the general public or the New Hampshire business community to question our motivation as Ways and Means members if a tax policy that is presently in place is fair and on a level playing field. It has been months since the Worldwide Combined Reporting Commission was formed, and it is still a struggle to motivate parties to populate this commission. I find myself concerned about the process of determining whether those responsible for populating this commission are serious of investigating this particular tax policy from 1986. That is why I feel I must vote against retaining this bill so that an open approach on the concerns raised by the prime sponsor in this bill can be undertaken in a timely fashion. Thank you, Madam Chair.
Representative Ulrich.
Thank you, Representative Schomburg, but I will defer to Terry, Representative Spilsworth, in that action is being taken to populate the committee. And I'm not sure exactly where we are as far as some of the other individuals, but I am aware that seats are being filled because I just filled one.
Thank you, Representative. Representative Spilsbury.
Yes, thank you, Madam Chairman. I understand and sympathize with Representative Schamberg's frustration. The good news is that Speaker Packard has, in fact, filled the vacancy in the House with Representative Ulrich, who I welcome to the commission. And I would just suggest that the primary reason for retaining is not the vacancies or the delay. It's simply that the commission was set on a timetable of reporting by November 1st. So retaining this bill syncs this committee with the commission's ultimate work product. And I think that's worth doing. And I think we would be doing it even if the commission was fully populated at this time.
Representative Doucette, did you have a comment? Anyone else on this side? Okay, sorry, there you are. Sorry, Representative Leapley.
Thank you. I just want to ask a question. If I understand there's a deadline in November, is there any timeline to which we think that the commission might start their work? Because I understand it's a very complicated issue and it might be
Representative
time
Spilsbury could
consuming.
probably answer that question for you.
Sure, good question. As I had mentioned when I testified on the bill, with the workload that the committee has in terms of revenue estimates and bill flow, there is really no point, not to mention the vacancies, in trying to have the commission meet much before the end of March with crossover coming about April 6th. So I would look for some progress in terms of our meeting to occur in the April-May timeframe, and then to be very much on target. Most commissions are formed with passage of a bill in the spring and a due date of that November. It just basically puts us back on that normal timetable.
Any other comments for discussion? Okay, seeing none, the motion before us is to retain House Bill 121. The clerk will turn off his phone and call the roll.
Motion to retain Representative Janigian,
Yes.
Representative Ullery,
Yes.
Representative Doucette,
Yes.
Representative Spilsbury,
Yes,
Representative Plett votes yes. Representative Kilcum.
Yes.
Representative Soti,
Yes.
Representative Ors,
Yes.
Representative Rochefort,
Yes.
Representative Almy,
Yes.
Representative Ames,
Yes.
Representative Southworth is not present. Representative Malloy,
Yes.
Representative Schomburg,
No.
Representative Fellows,
Yes.
Representative Bolton,
Yes.
Representative Elberger,
Yes.
Representative Leapley,
Yes.
Representative Smith,
Yes.
and the chair.
Yes.
Okay, the vote is 18 to 1 and 1 not present.
So we will retain that bill and see what the good commission does and go from there. Okay, we will now close the executive session on House Bill 121 and open up House Bill 145. And the chair recognizes Representative Janigian for a motion.
Thank you, Madam Chair. I make a motion to retain HB 145.
Is there a second?
I second.
Representative Plett seconds. Would you like to speak to your motion?
Yes, thank you, Madam Chair. On this bill, we also need to get some more information. We need to hear from the AG's office. There was a bill last year that addressed this, but whether we need more complete information is I think definite. So I think at this point retaining only makes sense.
Other discussion? Representative Almy.
Thank you. Well, the bill was the Wayfair bill, and it was 4 years ago, something like that. And we have a letter from the Attorney General's office about this, but from the gentleman that Attorney General Fermella put in charge of this area, the Wayfair area. But we will go along, I will go along with retain.
Yeah, I think we didn't have a lot of testimony for this bill, so I feel like we need to hear a little bit more. I know we got some written materials, but it would be nice to actually hear from some folks on this. Are there other comments on this matter? Okay, the motion before us is to retain House Bill 145. The clerk will call the roll.
Yes, Madam Chair. I'll never be fully ready. Representative Janigian.
Yes.
Wait a second. Retain. Representative Ullery.
Yes.
Representative Doucette.
Yes.
Representative Spilsbury.
yes,
Representative Plett votes yes. Representative Kilcum.
Yes.
Representative Sodi,
Yes.
Representative Orrs,
Yes.
Representative Rochefort,
Yes.
Representative Almy,
Yes.
Representative Ames,
Yes.
Representative Southworth, not present. Representative Malloy,
Yes.
Representative Schomburg,
Yes.
Representative Fellows,
Yes.
Representative Bolton,
Yes.
Representative Elberger,
Yes.
Representative Leapley,
Yes.
Representative Smith,
Yes.
and the chair.
Yes.
I just make sure my count was right. 19, 0, and 1 not present.
All right, so we will retain that bill as well. So we will end this executive session. I wanted to start nice and easy this way with some simple stuff. We'll be scheduling future executive sessions soon. So we now are in break time until 1:15. Thank you very much.
Yeah, easing into it.
Well, I did all that electronically last term too.
Good afternoon. The time being 1:15, we will now open the public hearing on House Bill 486 and welcome up the prime sponsor, Representative Hall. Comtoy, sorry, got that wrong.
Thank you, Madam Chair. Thank you, members of Ways and Means Committee. It's a privilege to be here before you today. My name, for the record, is Representative Barbara Comtois, Belknap 7, representing Senator Barnstead in Alton, New Hampshire. I introduced this bill this year. This was a law that was passed last session. And it has been brought to my attention that we're now people are not allowed to register their vehicles if they owe tolls in another state. And there's a lot of problems with this. It creates a hardship on those folks. They have to take time out of work now that they're not allowed to register their vehicle, or they didn't even realize that they owed tolls until they went to register their vehicle. And now how are they going to get to another state? How are they going to get back and forth to work? You know, we have other states that there's no monetary way. And then we're relying on the Postal Service to make sure they get these notifications. And just in New Hampshire, there are folks, when they try and call Easy Pass, it's hours on the phone. Or if they go down to the Easy Pass place, the office, it's at, minimum usually an hour just to get heard. If someone's working a regular 9-to-5 job, you're talking taking a full day off work, losing a day's wages to deal with some of these issues. That's just in New Hampshire. Imagine these people having to go to another state to fix these problems. And then once the problem is fixed, then they have to go to Concord, New Hampshire to get their registration released, even if it's already all their tolls have been paid. Okay, that is what's happening in New Hampshire. I don't know how it works in other states, but I would say that we are much more efficient here than the larger states. And if we're experiencing that here with our own constituency in this state, what is happening to people in other states? We don't collect sales tax for other states. We don't do a lot of things, but yet we're going to collect tolls and we're going to tell people that they can't register their vehicles, their only means of transportation to get back and forth to work, transporting their children to school. This is just wrong on so many levels. I am open for any questions.
Representative Tinigan.
Thank you, Madam Chair. Thank you for taking my question. I'm just trying to think of the potential unintended consequences. I mean, do other states help us out, whereby what if we can't collect tolls from somebody? I'm saying that backwards. If as soon as we stop doing that, we're going to have the same problem from the other states not letting us know if people from New Hampshire aren't paying their tolls.
Thank you, Representative Jenigan, for that question. And I would say to you, our responsibility is to our citizens of New Hampshire, not to the citizens of other states.
Other questions from the committees? Representative Fellows.
So I'm trying to get a better handle on exactly what the problem is. Like who are the people that are having this issue? Are they people who live in New Hampshire that drive their vehicles through the Easy Pass in other states when they don't have a transponder?
Thank you, Representative Fellows, for the question. So not everyone has an Easy Pass. Not everyone in the state has a bank account, so they can't have an Easy Pass. But if you're driving in another state, there's no way for you to pay a toll unless they take a picture of your vehicle. Well, then we're relying on the mail to get that to you. And if it doesn't get to you in a timely manner, then you're tasked with all these excess fees. So you're creating a burden on people. If they take the picture, and if someone moved and didn't get a chance to change their license, is that bill going to ever how long is it going to take for that bill to find them?
Follow up.
So I could be wrong because I didn't look it up. but my recollection, because I actually had a constituent that had an issue like this, is that if you move, you're supposed to notify DMV within, I think it's 60 days, but it could be only 30. So they would have your new address, so you would get that notification.
Thank you, Representative Fellows, for that. Yes, but if that bill is due in 10 days, now you're tasked with excess fines and fees.
See some other hands up. Representative Almy.
Thank you, Madam Chair. It does not seem to me that we're talking about the toll practices of the state of New Hampshire. We are talking about the toll practices of the states of Massachusetts, Vermont, Rhode Island, maybe Florida, for all I know, probably Florida. And they should be on applying the law in a way that does not overly burden the person that ran their toll booths. And if they are not, we can't do much about it except to extinguish the entire network of collaboration. Isn't it so? That's what you're asking for, between the states, which allows us to stop people from running our toll booths with impunity, which they would be able and know how to do if we pass this bill. Isn't that so?
Thank you for the question, Representative Almy. I am not sure. I mean, I understand that there are people out there that willfully break the law every day, and that is their intent. And if that's their intent, they have no intention of paying any tolls, whether they have to register their vehicle or not. I'm not talking about those people. I'm talking about law-abiding citizens that we're putting an undue hardship on, that are trying to provide for their families, that have no recourse. How do they satisfy something if they have a problem in, as you said, Florida? Do they have to go to, I mean, I'm not sure what the recourse is, but I know here in New Hampshire, it is long waits on the phone and a long wait at the office. And not only that, is even if you do pay your tolls and you are paid up to date, you then do not just have your vehicle registration reinstated, you then have to go to Concord DMV and wait in line again. So I ask you, I think this affects the people that have the hardest time in our state.
All right, follow up, but then we're going to try to get some new other
Yeah.
faces. Okay, go ahead.
Brief follow-up. Doesn't your bill do the opposite of this? It says that we should not comply with requests to block registrations from other states that have been treating the people that used to live in them or that drove through them badly.
Representative Almy, I'm having a little bit of hard time. Could you just repeat that question for me, please?
Yes. What you're asking here is that the commissioner shall not suspend any of the registrations of owners in violation of reciprocal toll collection enforcement agreements. That means that you are asking him to not deny the registration for people who committed violations in other states, not in ours. So we're talking about people who have problems in other states, not in ours.
That is correct. This has nothing to do if you owe tolls to the state of New Hampshire, citizens owing tolls to the state of New Hampshire. That is absolutely correct.
Thank you.
Oh, Representative Platt.
Yes, Representative Comtoy, thank you for taking my question. If I mispronounce your last name, you know where to get me.
Perfectly. You pronounced it perfectly.
Okay, thank you. What if people don't pay their tolls here? Do they get notices in the mail? Do they have to go to clean it up before they get registered here? Do they have to go to Concord?
Thank you, Representative Platt. Yes, they do. They do have to go to not only clean up their tolls here, but then they do have to go to Concord to get their vehicle registration reinstated. And as I said, we're relying on the mail to make sure people are getting these notices in a timely manner.
Representative Spilsbury has a question.
Thank you, Madam Chair. I think this follows up very much from Representative Plett's question. Given the arguments you've made, which I totally sympathize with, why are we making a distinction between those tolls that have been incurred while driving through another state versus those tolls that are not paid at home? So, I mean, just speaking for myself, I voted against this bill in the last term, but you're only trying to reverse a portion of the problem.
Okay.
And how do we make that distinction?
Okay. Thank you, Representative Spilsbury. My original intent was to reverse it all, but I was told that if I did that, I would dismantle the Easy Pass system. So I figured that probably wouldn't be very popular.
Representative Malloy has a question.
Thank you, Madam Chair. Thank you for taking my question. If you could please help me understand your definition of timely manner.
Thank you, Representative Malloy. Well, if you have a toll, say coming from Massachusetts, and the toll has to be paid within 14 days, and you're relying on the mail, and you don't pay that toll in 14 days, then you're charged late fees and other fees. And say you never got that mail because somebody else, you didn't even realize that maybe someone else borrowed your car and they went through Massachusetts. It wasn't even you driving. So you just didn't even pay attention to it. Then you go to register your vehicle in the state of New Hampshire where you live, where you've been abiding by everything, and you find out you can't register your vehicle for an unpaid toll in another state.
Representative, drawing a blank on how to say it. Rochefort?
Rochefort, yes.
Thank you.
Thank you, Madam Chair. And I thank you, Representative. I think you may have answered my question. Going back, this really kind of getting a better understanding of reciprocity. So the way I'm understanding this is you've got somebody in New Hampshire that breaks a law in Florida, but they're being punished in New Hampshire for a law being broken in Florida. So
Thank you, Representative Rochefort, for that. And yes, that is exactly what is happening.
So if I could follow up on that. So we're speaking about tolls here. Are there any other examples where New Hampshire citizens can be, obviously you can, commit a felony, but I'm thinking you go through a stop sign in Florida and they take a picture of your license plate. Are those instances, do people in New Hampshire run the risk of losing the ability to register a vehicle in New Hampshire for other types of reciprocity arrangements?
Thank you for the question. Honestly, I can't answer that question. And the reason this bill was on my radar was when it passed last year, of which I also voted against. And I just thought it was egregious that we would do this to our own citizenry.
Representative Schamberg.
Thank you, Madam Chair. When I was looking at the DRA fiscal note, is the number correct down there that there were just 88 vehicles that fell under this reciprocity agreement last year or the year before, or?
Thank you, Representative Schamberg. I'm not sure. DRA has better records than I do.
All right. Other first-time questions? No more first-time. Representative Almy, did you want to ask a question again? Okay.
Could I just make a mention to the chair? This is not a DRA fiscal note. This is a transportation and
Yes, right.
safety fiscal note because they're the ones who keep that data.
And just so you know, we have a representative from the New Hampshire DOT who will be speaking to us that maybe can answer some questions. And hands up on this side. Yes, Representative Spilsbury.
So a different angle on the reciprocity. What does New Hampshire do when a Florida resident driving a car with Florida plates goes through a toll and doesn't pay in New Hampshire?
Representative Spilsbury, honestly, I do not know. I wasn't looking into what happens to a Florida resident. I'm only concerned with New Hampshire residents.
Thank you very much for your testimony.
Thank you, Madam Chair.
Okay, we'll now recognize Representative Hole. Come on up.
Good afternoon, representatives. For the record, Representative Hole, serving the towns of Dunbarton, Hooksett, Allenstown, and Epsom. Here before you to support House Bill 486. And I guess, although there's context relative to RSA 263-56-F, I think it makes sense to have a little bit of an understanding of what happens when your vehicle registration privileges have been suspended. And in Part 2, it goes on, the director shall, pursuant to RSA 541, right, create rules regarding the reinstatement privileges. $250 is the first fine. It goes up for a second offense at $500 and then $1,000 for third and subsequent offenses. So what we're talking about is potentially denying someone the ability to register a car, and then New Hampshire enforcing a penalty at $250 for potentially something as simple as a missed or failure to read of an easy pass going down while you're visiting some other state. Our Constitution is pretty clear under Part 1st, Article 18, penalties to be proportional to the offenses. I'm not sure, A, we should be the toll collection agency for the rest of the country, but more importantly, if we are, the penalty section should be more in line with the offense than they are today. And I think that's the root cause here is we're suspending the registration privileges, potentially denying someone the ability to get to work. I would consider that an overly harsh penalty for something as simple as a missed fine. Here's a good example. You're coming home from Maine over the weekend. Your transponder seems to be working fine, and you missed you missed the exit to get on 101 headed west, and lo and behold, you're now headed into Massachusetts. And you end up racking up a couple other tolls, but one of those doesn't read. You don't realize it doesn't read. Your battery on your 14-year-old guilty transponder has finally died. And although it didn't happen in Massachusetts, it did happen in New Hampshire a few times. They failed to notify you. I don't know if any of you are getting house calendars late. My last one was 5 days after it was sent out. I only live 11 miles from here. Okay. Relying on the United States postal system to deliver mail in a timely manner is not a given. Although it is a constitutional requirement, it is not a given thing that we can trust in 2023. So I would ask that you see that the true cost, right? Yes, there's a revenue impact to this bill. That's why it's here and not in transportation. But more importantly, this is about proportional penalties relative to the offense. And I think the proportional penalties right now of denying someone the ability to register a car and then forcing them to spend $250 to get their registration back is way out of line relative to someone failing to pay a fine. Let's say it's malicious. I'll go to the corner case that they knowingly drove to DC and back and chose not to leave their transponder in their window, and they racked up $30 worth of charges both ways for all of the tolls. And they tell everybody from Massachusetts all the way down, we're just not going to pay it. I don't even think in that case, for the $60 of failed tolls, our current punishment makes sense. I think there needs to be a better way. If we're going to do reciprocity between states, that's fine. But I don't know that we should be in the business of collecting tolls for the rest of the country, nor should they be in the business of collecting our tolls. I think fundamentally we've created a problem by this interstate agreement. I would ask that you would support this bill to stop this. Thank you.
Would you be open to questions?
Sure, do my best.
Other questions? Over here, Representative Leapley.
Thank you for taking my question. I'm wondering if you could just help me understand your testimony. I'm looking at line 10.
Mm-hmm.
So it says the director shall notify the owner in writing by first-class mail that the owner's motor vehicle registration privileges for the vehicle driven in violation of RSA 23631 are suspended as of the date, which is 30 days from the date of notification, unless the toll and any administrative fees assessed by the Department of Transportation are paid. So currently that fee is $250?
No. So that fee kicks in after the registration has been suspended.
So if a person receives a letter that they have failed to pay a toll and they respond by paying the toll and any administrative fees, then they're all set. They don't lose their registration. They don't.
Correct. If
Okay.
if that was the important element in that sentence, if they receive the notification, given that we're still relying on the United States Postal System to deliver some of this, because that is the system of record right now, and there is not it's not like it's a registered mail or something that's going to be traceable. This is typically sent through first class mail by another state to us. It may or may not get to the right address. They may or may not have an accurate record in their database, right? Easy Pass may have outdated information. I could think of a lot of reasons why that particular letter does not arrive at the individual. So now, not only have they missed the first letter notifying them that they missed a toll, then they get a second letter that says you missed a toll and you've been assessed this additional fine and penalty for failing to pay the first time. It now kicks it back to New Hampshire. So failure to communicate shouldn't be a punishment at the $250 level. If it was something like it was a registered letter where there was, right, they had to sign the letter to acknowledge receipt, then the rules start to change. At least the person is aware of what's going on. That's not the case today.
Representative Roadford.
Thank you, Madam Chair. I'm trying to get, if you could help me with this. So what I'm understanding is someone doesn't pay a toll in $1.75 toll in Massachusetts.
Right.
They blow it off, intentionally or unintentionally.
Yep.
So that reciprocity means they can't register a car in New Hampshire, so that takes away their ability to register a car. And the state of New Hampshire misses out on revenue from car registrations.
Yeah, right.
So would you agree with me that we're actually the state of New Hampshire is the biggest loser in this?
So based on possibly, right, based on the fiscal note that's in the bill, it looks like we might not collect $32,000, assuming that the DOT captured their information correctly. And I'm reading the fiscal note, right? We might be at a loss where other states are helping us force collections. But at the end of the day, it might affect a car registration. It might affect someone's ability to drive a car. And we have an obligation to make sure our punishments that we hand out here within the state are somewhat compliant with the Constitution. And this is definitely not proportional to the $1.75 toll, where you're revoking someone's ability to potentially drive to work the next day. That could be problematic. And it kicks off another series of events, right? Once you've gone down this path, now you don't have a registered car and you get pulled over by a police officer. Now you're driving an unregistered vehicle. So this just snowballs into a series of problems over a toll that was supposed to be collected in another state. We're not in the business of doing the work for the other states. As far as I know, we don't really get paid to do the enforcement for work for the other states. I understand the desire to have a reciprocal agreement between states because it makes it a little bit more convenient, but convenience is not why we're here. We should, in fact, be enforcing our laws on our citizens and not trying to enforce the laws of other states on our citizens.
Representative Ames has a question.
Thank you. I'm here.
Yeah.
Yeah, I think you mentioned an interstate agreement, and I don't know whether you meant by that there is such a thing, but if there is, maybe you could tell us about it. And then sort of related to that question is what you know about what other states have put into their laws in terms of enforcement that might be parallel, consistent with, or inconsistent with what's in this bill. And I will say that you would make a good point about the disproportionality of the punishment that's in here. Whether it's unconstitutional or not, that's a different question, but yeah.
Right. So, by no means an expert on the toll collection systems for the other 49 states. So I don't know that I could effectively answer or speak to that part of the question. I do think, right, we as a legislature should be crafting laws about how we enforce our laws on our right relative to our citizens. And if someone from Maine drives through New Hampshire to Massachusetts and fails to pay our tolls, right, we may have our only recourse maybe the next time they're on the roads and an officer spots them and realizes that plate it owes money, that, right, when they pull them over, right, they were speeding, they pull them over and say, oh, you're owing money. Now it's time to collect that fee. That might be the only recourse available. It's very difficult to enforce our laws on residents who spend a very limited amount of time traveling through the state.
You're okay with more questions?
Sure.
Okay. Representative Platt has a question.
Yes. What is the cost to the DMV to suspend registration and then to reactivate the registration? Is that anywhere near $250? Do you know?
I do not. That's a great question. I would ask that you would ask the person who signed up from the DOT to speak, that's supposed to speak after me, that same question, because I don't know what the cost is. It does seem like that's a fairly hefty fine relative to what we're talking about.
Representative Elberger has a question.
Thank you, Madam Chair. I'm curious about who sets the fees for penalties and why we're not talking to them about changing those fees.
So in RSA 263-56-F, right, we set the penalties for a suspended registration in Roman numeral 2, sections 1, 2, and 3. Relative to the late payments and penalties, that I'd have to dig into. I'm sure we probably established a maximum penalty somewhere in statute or gave authority via rules to the department to be able to do this for assigning penalties for late payment. And I don't know what the current one is. I had a similar experience when I had to deal with a transponder that was 14 years old, and I was one of the early adopters, and it recently died about last year or the year before. And there was something like 30 charges that had racked up in a month because the responder wasn't working. And I drove up to Concord and spent a fair amount of time and straightened it all out. There was some penalty associated with it because their data was old, and they said, you know, we should just give you new transponders for all your cars because you're bound to have this problem on your other vehicles in a relatively short period of time. So I ended up getting 4 new transponders for our family. I don't know who sets it, but typically in statute, the legislature sets a maximum. I just think that the maximum for this particular section is wrong, and I don't think we should be enforcing other states' laws.
Are we okay? Representative Almy has a question.
Thank you. If we passed this, we would be relieving our citizens on paying penalties on their violations in other states, but not within our own state, which you've been using as an example of unreasonableness. On why would we want to do that? Just to leave it to the out-of-state ones.
So let's start with not being the law enforcement agency for the other 49 states. And then while this bill is in this committee, maybe the right thing to do after you speak to the member speaking after me is readjust the penalties so they're more in line with something that would be reasonable, because I could make a convincing argument that we should truncate the last zero for all of the current penalties from 2550 to 100, versus the current 250, 500, and 1,000, and it would be more in line with failure to make payment on a dollar charge driving down the highway.
Representative Orrs has a question.
Thank you, Madam Chair, and thanks for taking my question. So would a possible fix be to amend this bill so that we not only reduce the fees that you've just mentioned, but also to start the clock when they've signed off on a registered letter notifying them that they have a deficiency?
I think that would be a great solution to some of the problems that we're seeing, because failure to notify creates this snowball effect of problems for the person that they may not be they may not be aware of. Sorry, I'm losing my voice. So.
Yeah.
Follow up.
Thank you, Madam Chair. More of a statement just than that. I don't get the paper calendar anymore because it takes about 8 days to get to my house. That's a problem. And recently I've gone through the toll booths before I got my little orange transponder, and I got a bill with my picture saying you owe money. And I'm like, gee, I thought it was working. They're saying, oh, it does still work. So yeah, we do have some issues there.
Thank you very much for your testimony and for your patience.
No problem. Thank you.
Great. Okay, let's recognize John Corcoran from New Hampshire DOT. Come on up.
Good afternoon, Madam Chair and members of the committee. The Turnpike system operates as an enterprise fund, when all the revenue collected on the system must be used on the system. The revenue is collected to pay for our operation and maintenance, our debt service, our renewal and replacement program, and our capital program, which follows the state's 10-year program. All revenue on the system is put back into the system. Reduction in revenue ends up creating delays in our capital program. As you've heard, we operate on the Easy Pass system. The Easy Pass system consists of 35 toll agencies through 19 states. This provides a seamless, efficient, effective way to collect tolls for in-state and out-of-state residents. The users on the system are supposed to pay the toll at the time they pass through the toll. There are a variety of options they can pay the toll. When they are fail to pay the toll, incur a significant number of violations, they are faced with suspension of their registration. This is the toll enforcement method in place, and it is effective. New Hampshire residents are faced the consequences of suspension of the vehicle registration for failure to pay tolls, and Mass and Maine are faced with a vehicle suspension for failure to pay New Hampshire tolls. We were able to collect from the Mass and Maine violators because of this reciprocity toll agreement we have in place. The department opposes HB 486, which will eliminate the reciprocity toll collection enforcement agreement with Mass and Maine, which has been in place since 2011. This presents a problem for the toll system of the enforcement of toll violators from Maine and Mass. In other words, we will not be able to collect tolls from Maine and Mass, and they will just be able to ride through our system free. To try to explain how this process works from the lane, as a person passes through electronic toll lane without a transponder, our violation system takes a picture of their license plate. The transactions and images from the lane system go to our Easy Pass back office vendor. They go through and they view the images and they get the plate state, the plate number, and the plate type. And what that allows them to do is we send out a file to the DMVs, Mass and Maine, New Hampshire, and 5 other states, to get the owner of the vehicle's name, address, so we can send them an invoice. We typically send first invoice we send out, they have 30 days to pay. If they don't pay that invoice, they get a second invoice and they have another 30 days to pay. that invoice is actually pink, so it stands out more to get their attention. And if they don't pay that invoice, we send out a violation notice, which they have another 30 days to pay. Now, before we can put somebody in DMV hold, the suspension of the registration, they have to collect up to, there has to be 10 transactions where they were at a violation level notice. We can't just do it on one transaction. They have to have up to 10. And before we even send somebody to DMV hold, we reach out to the customer again in a letter from the Department of Transportation and offering them a settlement to pay before we send them to DMV, which they would get their registration suspended. They get 30 days to pay that settlement. If they don't pay, then we send them to the DMV, and DMV puts the registration in suspension or potential suspension. DMV sends them out a letter and gives them 30 days to pay. And then if they don't pay, the registration is suspended. The registration owner of these vehicles gets several notices. We're typically not dealing with people with 10 transactions. We're dealing with several hundreds of transactions. People owe over $500 in tolls. These habituated offenders get a lot of mail. They get first invoice, second invoice, violation for every time we're sending these out to them. To give you an idea of how many images our back office vendor is reviewing, in November, there was 1.3 million images that they reviewed of license plates of vehicles who went through the toll plaza where we didn't collect an Easy Pass transponder. Of those images, 51% of New Hampshire, 24% were Mass, and 7% were Maine. Out of the other states, it went from 1.3% to almost nothing. And that's why we have the reciprocity agreements with just Mass and Maine, our neighboring states, because they're the majority of the customers who fail to pay their toll. Presently, our DMV hold process with Mass and Maine, we are only limited to send 20 holds a month to them. And that's because it's a manual effort. Currently, the hold files have increased over the past 3 years due to COVID and also electronic tolling. For Mass, they are the more, we have more holds with Mass than Maine. And in 2020, there were 9,000 holds created. 2022, there were 14,000 holds created. Of those 3 years, we had an average paid about $2,500 paid, and that was approximately $80,000 in tolls. Still outstanding in Mass, and the 3-year average is like 11,000 holds, and that's about $228,000 in tolls. That is mainly because we have that 20 per month limit. Maine is a little less. Maine, we have around 2,500 holds in 2020, up to 3,500 in 2022. The average for those 3 years, we had 500 holds paid, and that was about 11,000 tolls. And then the outstanding holds for them is around 3,000. It's only $95,000 in tolls. We are working with Mass and Maine to try to automate the system instead of making it manual, so we could send more holds out and go after the ones that are still outstanding. For the reasons above, the department opposes the H-Bill 486 for discontinuance of the reciprocity agreements with Mass and Maine, especially due to the loss of revenue and not treating New Hampshire residents similar to the violators from other neighboring states with the suspension of registration. That concludes my testimony, and I'm happy to answer any questions.
Thank you for your testimony, Representative Platt.
Yes, do you have that testimony in writing?
No, these are my notes. We can.
Would you be kind enough to
Provide-
share those notes? Yes.
Yes, we
it
can
was very
provide-
helpful. You gave us a lot of great data points that I think we'd like to think about. I see a bunch of hands over here. Representative Malloy, did you have a question? Okay. Representative Britton, did you have a question?
Yes, thank you, Madam Chair. There's a couple of quick questions. What are the other 5 states that are included with Mass, Maine, and New Hampshire?
We also do address lookup with Connecticut, Vermont, Rhode Island, New York, and New Jersey.
And could I also ask what kind of punishments they might do with shirkers of out-of-state tolls, similar to New Hampshire, or what?
The only ones I know with is Mass and Maine and New Hampshire. We're the ones who have the reciprocity agreement where we're allowed to suspend the registrations. Like with New York, if we send invoices out to them and if they don't pay, it just sits there. We don't have a reciprocity agreement with them. And typically, it's just our neighboring states because they're I'll say the biggest customers who don't pay the toll. You know, the other states, it's a lot lower for the invoices that we send out to. And like somebody was talking about Florida, we don't go out and send invoices to Florida. Sometimes it costs you more money to just create that invoice and pay for the DMV lookup and send it out to that customer in Florida.
Okay, I think I saw more hands over here. Representative Doucette has a question.
Thank you, Madam Chair, and thank you for taking my question. I guess I'm a little confused. Your testimony stated that if this component, and the way I read this proposed legislation, it talks about the enforcement end of things relative to suspending a registration. But you're saying in the reciprocity agreement that if we were to suspend this component, we wouldn't be able to collect tolls from neighboring states with the Easy Pass transponder?
With an Easy Pass transponder, we collect tolls. It's the people who don't have a transponder, who are going through, with no transponder, and we're sending invoices to them. We still, the reciprocity agreement gives us the enforcement of DMV hold, to suspend their registration so people will pay. If you don't have that, there's no strong arm behind that to get them to pay.
Follow up.
Just to follow up, I believe you testified that there were over 1 million of vehicles that went through the toll that did not have or did not register an Easy Pass.
There was 1.3 million of images our vendor reviewed. They usually get 2 images per transaction. And I will tell you, some of those, at least 50% of those images end up becoming image tolls. And what that is, that's an Easy Pass account holder who might not have had their transponder mounted, or maybe the battery's dead, and that we pick up their license plate and their license plate is tied to their account. So we charge their account still that way. It's just all the images. I was trying to explain that how many are from New Hampshire, Maine, and Mass.
Follow up.
And not to belabor this, but I guess you'd have to look at the language of the reciprocity agreement. But so is it your opinion and or testimony that if we suspend this component here as far as suspending registrations, that the other states, Massachusetts and Maine, would not assist the state of New Hampshire DMV in collection of those outstanding tolls? Or is there something in that language in that reciprocity agreement that allows for that? Or can you answer that?
The suspending the reciprocity agreement will still allow us to get addresses from Mass and Maine to DMV to send out invoices to. It's just after these people, they get up to the violation notice and they still don't pay, and there's up to 10 of them. When it goes over 10, then we submit them and hold, and that's sort of the strong arm. So they can't. They have to register the vehicle. They have to pay the Easy Pass tolls first. So that's what we'll lose.
Representative Jinigian.
Thank you, Madam Chair. Thank you for taking my question. So the concern earlier was that you could unknowingly, get a toll that you didn't pay, and then suddenly you can't register your vehicle. But from what you're saying, it's going to take at least 10 of these non-paid tolls until it even registers, until it becomes a problem and you can't register your vehicle.
Still becomes before that they have ability to go into DMV hold. And
Okay.
I'll tell you, since the backlog we have, somebody with one DMV hold, we are unlikely going to touch them over the next couple of years. There's so much bigger violators with 10, 15 holds.
Representative Fellows has a question.
Thank you. I just, for people who have, suppose somebody has a transponder and it's not working correctly, and they're a New Hampshire person, what is the method that you would try to contact them by? Do you have emails, or do you only have post office addresses?
If a New Hampshire customer is going through the toll plaza, and say I was mentioning image tolls, if you get 10 image tolls in a row, we send out a text message. If there's a cell phone on there, we send an email out, and then we send a letter out. There's certain, like, I think it's 15 days and 30 days, and then up to 45 days. I can't, if that's the exact number, but we try to reach out to them to tell them, and then we say that either your transponder's dying or it's not mounted correctly, and we remind them too, when it is an image toll, they don't get the discount too. So,
Representative Plitt.
Yes. Do you have any comment about the $250 fine? Assume you're not. That's DMV business.
that is DMV. I'm not exactly sure of their fines.
Representative Spilsbury.
Thank you, Madam Chairman. Which, if any of these states, suspends the license of their drivers for failure to pay tolls in New Hampshire?
Mass and Maine, if a person in Mass is violating New Hampshire and we get their license plate and send them all the invoices and stuff that I mentioned, we send it to Mass DMV and then they suspend their registration to pay New Hampshire tolls. It's only Mass and Maine that we're allowed to do that with.
Follow up.
So from an enforcement perspective, as opposed to a revenue perspective, which do you think is more valuable to your department's objectives? To induce those other states to suspend their drivers who are violating while traveling on our roads, or to suspend our drivers when they're traveling on their roads?
The whole reciprocity enforcement is important to us just because, and it's important to Mass and Maine too, because typically the highest violators are your neighboring states who have tolling, a tolling system. Like Vermont is not very high. So it is important to us to be able to, when somebody is violating in Mass or Maine on our system, New Hampshire tolls, to allow us to go and do the registration suspension to Mass, and then they do the similar thing as our New Hampshire does, sends out a letter to them and informs them and tells them it's New Hampshire tolls you got to pay. And Mass does the same thing. Mass or Maine does the same thing with New Hampshire customers who are driving on their system and not paying the toll. I'm not sure if I answered your question or.
I'll just characterize it as a frustrating answer.
Representative Rochford has a question.
Yes, thank you, Madam Chair, and thank you for explaining. And I do look forward to some written information, because you provided a lot of information that I think will be very helpful to us. One of the things that you mentioned was that New Hampshire won't take action unless there's 10 transactions or violations. So I'm assuming then that that's a Massachusetts vehicle that's coming here and violating 10 times before you would send a reciprocity type action. How many violations does it take Maine or Massachusetts for them to take action against one of our drivers?
They have to follow the same rules as us. It's all 10. We all agreed to that. It's all part of the reciprocity agreement.
Representative Sodi, did you have a question?
Yes, thank you. if I understand correctly, there's nowhere in the process of getting letters, do they get a certified, registered letter saying that, hey, wake up, pay this?
No, it's all first class mail, no registered letters. It's,
Representative Platt, then Representative Leapley after that.
Why can't we read a Sun Pass or a Go Pass from Louisiana or whatever?
we can, Florida, which is the Sun Pass, they are part of the Easy Pass system now. So we can read them, and we do get toll. We collect toll from them through the Easy Pass transponder. And now you can travel from New Hampshire all the way down the coast to Florida and use your Easy Pass.
Representative Leapley.
Thank you. So if I understand your testimony correctly, someone who violates 10 times will get a letter with a 30-day period within which they can pay, a second letter with another 30 days, a third letter with another 30 days. They'll get a letter of settlement saying, hey, you should pay this. And if you pay this now, maybe you'll only have to pay X. That also has 30 days. And then you send them on to the DMV, and then they get a letter from the DMV, which gives them 30 days to pay. So they have 150 days to pay, basically, before their registration is suspended. And these letters, I'm assuming, you're sending them to an address because the person has registered their vehicle with their state, and so their address is on file with their state. So it would only be going to an incorrect address if they weren't registered properly with the state and failed to have their mail forwarded, for example.
Yes, you're correct. That's
Okay.
how the process is. Now, if
Thank you.
there are times where we'll get, say the person no longer lives there, they return mail. We do not carry that forward. So we wouldn't put anybody in hold or send out additional invoices or violation if we don't have the correct address.
That was very helpful. Thank you. Anyone else before we? Yeah, Representative Spilsbury.
If I may, one more. Roughly, what percentage of the state's roads, and I don't just mean state highways, I mean roads, including locally controlled, are covered by a toll?
The New Hampshire Turnpike system, there's only 83 miles of the Turnpike system, and that starts, it's on in Concord, exit 14 on 93, and it goes all the way down south to 293 through Manchester to Effie Everett to the Mass border, and then that's called the Central Turnpike. The Blue Star is over on the Spalding, which is like, I-95, which is like 16 miles. It goes from Mass to Maine. Then the Spalding Turnpike goes from like Portsmouth Circle. It's also known as like Route 16, and it goes up to Milton.
So you're confirming my understanding, which is that it's an almost infinitesimally small percentage of the miles. I understand they're significant roads and they're well traveled. So I think the thrust of this bill, it has nothing to do with the notices and the fines. It has to do with whether suspension and revocation of a driver's license is a reasonable or a disproportionate penalty device. So somebody who violates a toll on that little tiny portion of our roadways effectively is denied the opportunity to drive on any of our roadways or to drive at all.
Is there a question there?
I'm sorry. Am I understanding that correctly?
Their registration gets suspended, yes. If they don't pay,
Do you have a little bit more time?
Yes, I do.
Okay, I see a few more hands. Did I see hands over here? Did you have any more questions? Yes? Representative Almy has a question.
Thank you. What percentage of the revenues that come into the turnpike system are tolls? And how much debt have we got in it?
And how much I missed-
Debt.
Debt. Ooh. Our bond payments right now, this is it's around 40 million that we're paying each year. Toll revenue in fiscal year 22 was around 122 million. And then with that, we're paying for all the operation and maintenance and projects.
Follow up?
So, all of the maintenance and extension of the turnpike system is from the toll money.
Yes, everything's from toll revenue.
Thank you very much for your patience and answering all of our questions. I don't have any other pink cards for House Bill 486. Is there anyone else who wishes to testify? All right, seeing none, we will close the public hearing. Thank you. Okay, moving right along. I do not have any pink cards for House Bill 569. There's one coming. Okay. Oh, except for dear. Yes, the best email address would be House Ways and Means Committee at ledge.state.nh.us. Yes, that's fine too. Thank you so much. Thank you. I apologize to make you do that. Okay, we will now open the public hearing on House Bill 569 and recognize Representative Ames.
Thank you. Just trying to get my papers together here. Yeah. Okay. I'm here to speak in support of House Bill 569, which I'm the sponsor of. And I really want to, well, first, you have papers in front of you that I handed out. There should be 3 different items. I'll point to them. And one of the items is what is basically the notes that I'll follow in trying to present this bill, the key elements of 569. What I really want to say at the very outset is that this bill is essentially the same as, with updates, as House Bill 504 from the previous 2-year session. And that bill went through review before this committee, was retained, went through an interim study process, and came out at the end with a, what's the right wording? A favorable report, shall we say, ought to be considered for future legislation, and with a unanimous report from this committee. So that's background. Last year, also, I'll get rid of this one piece of paper for you or put it in its place. During that process, the committee heard from William Ardinger, Bill Ardinger, so a well-known tax attorney and constitutional lawyer, and I had actually worked with him on the what was it called, the School Funding Commission. He was the governor's appointee, and I was appointed by the speaker, along with others. And he and I, both being lawyers, worked closely together. I admire the work he does. And within the purview of that commission was this question of the statewide education property tax, which this bill addresses. And he felt strongly that as it stands now, it violates the Constitution, and he felt it important to come to a hearing on this bill and testified to that effect, submitting this letter, which I have distributed to you. At the time, I spoke with him just yesterday, and he could not be here. Regretted that because he does really feel strongly about this issue, and asked that I present this letter again for him. So that's background on that. The committee report from last year, by the way, is at the tail end of this two-page document. I've just reprinted it down at the bottom, so you can look at that if you will. The bill itself, I'd say, is best considered in three pieces. One is the part that is an essential reform of the statewide education property tax. The second piece reforms the low and moderate income, homeowner income property tax relief piece that was originally put into the law as part of the enactment of the statewide education property tax. So there's a reform to the taxpayer relief program that's associated with statewide education property tax, and that's the second piece of this bill. And the third is a study committee to look at how those tax relief provisions might be extended so that they would benefit renters. And also to look at other questions that are noted in the bill itself. So three pieces. So picking up on the first one, the statewide education property tax itself and the reform that's proposed. First thing to note is that there's no change here in the rate. The rate currently, well, I'll say the rate for fiscal year 24, the next fiscal year, reverts to the statutory rate that has been in place for a long time, which requires that the Commissioner of Revenue set the rate, statewide rate, equalized, at a level sufficient to raise $363 million. And then there's a rounding allowance so we can set the rate at, I think, a quarter of a penny. A quarter cent. And so the amount that's raised tends to be just above $363 million. I have to say that it's for fiscal year 24 because this year it's $263 million, and that's a temporary provision that was put into the budget last 2 years ago. And so for the year we're currently in, the tax bills were based on the need to raise $263 million instead of $363 million, and your bills reflected that. Going back to $363 million means about $1.44 equalized across the state. Of course, the equalized rate is not what you see in your bill because each town has slightly different variances from the equalized level. So no change in the rate in this bill. That stays the same. Remittance to the state, however, is changed. And this bill requires that all collections at the municipalities will continue to collect the tax, but the collected money will be remitted to the state. But after a holdback of 3% of what is collected by the municipality to cover costs of collection and costs of promoting the taxpayer relief program. That's new. The 3% holdback is new, and the remission to the state is new. So first on why remit to the state. That's what Mr. Ardinger is concerned about, the current retention of money locally. Under the current system, the money is retained locally and is passed on to the school district or school district serving the town. The constitutional problem arises where the town collects more than its entitlement to adequate education money. And the excess above that level, what we refer to as excess swept, is also retained and kept, and in most places is then sort of spent as part of the additional effort that's made on education by that local school district. There are some places that have no additional effort because they really don't have any school kids. They're small places, and in those situations, the money is kept and spent on whatever. I don't really know, but they're small collections. I gave you a handout, a spreadsheet, and I'll just explain what's on there. You have to take it away and look more closely, I'm sure. But this has all the towns on it, the left-hand side. And it also has the school membership on it, the total number of pupils attributable or coming from each town. And then what you'll see on here is a number of bars across the page. Those are the towns that have excess swept, that are collecting more money through the statewide education property tax than their adequate education grant would come to. So Alton is I'll just show you on, if you'll take a look at Alton, the first town that you come to alphabetically on the front page, you'll see right there in the middle that they've collected, I need my glasses, I can't even see it, 1,039,795, if I got that right. And that is the balance that's left after what they collected was applied against the adequate education money that they're entitled to. So they've paid for adequate education. They still have left over 1,039,000, and that money is excess swept. That excess swept is retained by Alton. I believe it's all applied to other educational costs, and that's typical of most towns that receive excess swept, but there are exceptions. And again, if I can see the darn thing. If you go, yeah, a good example would be on the next page. I don't think there's any example on the first page. On the next page, just go down to Clarksville. Clarksville, no, I prefer to go down to Dixville. Let's go down to Dixville. You see that Dixville doesn't have any school kids. They're still assessing swept, and Dixville is receiving $14,591. and it's keeping that. And it then has on its tax bill, according to what the DRA puts out each year, a negative tax rate for its local education rate of 52 cents per thousand. So there's a lot of information on this. Take a good look at it. One other column that I should mention is the 3% that's now going to be allowed if this were to pass, as an amount retained at the local level. Going back to Alton at the top, you'll see that the 3% retention is column K is $113,000. So that would be new revenue to Alton that they didn't have before. They would, of course, be giving up the excess swept, so it doesn't really balance out. The reason for pushing for remission of excess swept to the state is really legal. It is felt by constitutional lawyers who look at this, not all, I should say. There's a disagreement on this, but that this in effect results in a disproportionate tax. This is a statewide tax, and if a town is allowed to keep part of it for reasons that are independent of any statewide spending program, then that becomes a disproportional tax and certainly jeopardizes its constitutionality. The question is now before the Superior Court in litigation that's ongoing. It's called the Rand v. State of New Hampshire case. So the second part of the bill is changing the taxpayer refund system, making it far more generous. It makes it far more generous, and all of the refunds would be paid out of swept collections. It makes it far more generous by extending the calculation of the tax that can be subject to a refund to the local education tax revenues as well as the swept revenues. So that for a particular taxpayer, they'd look at their tax bill and they'd have the swept amount there and also the school tax amount, and those together would be the amount that would be eligible for a consideration for a refund. I'm not going to go through the detail, but there's sort of a laddered a sliding scale that that means that the low-income property taxpayers get 100% of their tax bill if they're below up to a point. It's kind of complicated. I don't want to take up too much time here, so I'm trying to do it without going into that detail. But there is a sliding scale, and you get more if you're very low income, and if you're sitting in a house that has some value to it, and then it goes down as your income goes up to a point where you receive nothing. You're no longer eligible. So that's the second part of it. You can look more closely at that. I think it's a good set of numbers that are in that. There's always a better way to do it, so I'm completely flexible on that part of the bill. And then the third part is the study, and you can look at the language of that. Again, I won't bother you right now with going through that. It's easy to read, but it basically is trying to see if there isn't a way that we could be more helpful to tenants and, of course, their landlords in a way that would be helpful to everybody and maybe to our affordable housing problem. So I think I'll leave it at that. I tried to rush through a pretty complicated bill, and I'm sorry for that, but all the information is here.
Thank you. That was a great high-level overview, and obviously there's a lot to read here, so we will do that. But would you entertain questions right now? Excellent. Representative Platt.
First one I have, and I'll take my turn for future ones, is thank you for taking the question. If the state is required to provide 100% of an adequate education, and you're taking 3% off, leaving 97%, are we then only paying 97% of an adequate education?
Thank you for the question. We're not subtracting it all from the grant, adequate education grant. The community will get its full grant, and that'll be paid by the state from funds that include SWEPT funds and also the many other sources of funds that the state turns to when it determines what revenue is available to pay for an adequate education. So the same formula would apply, the same calculation would be made, they'd get the same amount, and I have to add that it's a woefully insufficient amount.
Okay, Representative Janigian.
Thank you, Madam Chair. Thank you for taking my question. The part that deals with low and moderate income tax, not income tax, low and moderate income.
It's a
level.
mouthful.
What, actually now I've thrown myself off. Who would audit that? I mean, is it each town to be responsible for figuring out if the person qualifies, or is that done at a state level?
That's a good question. The administration of the low and moderate income tax program is the responsibility of the Department of Revenue Administration. So it's centralized there, and I'm not sure what auditing has happened over the years.
And folks, we do have another pink card for another individual, plus we have DRA here to answer more technical questions. Other questions for Representative Ames? We'll be seeing you around, so
Yeah,
Representative
exactly.
Orrs.
Thank you, Madam Chair, for taking my question. Thank you. So is this an additional tax on the property tax that people are paying now?
It's an existing tax, been around since 2001 or so, at a higher level at $6.60 per thousand then. It's now, with this funny way of determining the rate, it's about $1.40 or so. And it shows up on your bill, anybody's bill that has has property. It shows up as one of the four components of the property tax. You've got the county, the municipal, the local education, and then the SWEP, the statewide education property tax. So it's not new. Yeah.
Follow-up question, please.
Follow up?
So I went through this with former Rep Doug Hall, who you might know.
I know him well.
Okay, very good. And I have a lot of respect for the man. If I understood the way this was originally set up, certain towns that were much richer than, say, where I'm at, Pittsfield, Chichester area, I thought that money was supposed to be collected and shared amongst the other towns to help spread the burden, you know, to help out the towns that don't have the numbers, such as Pittsfield. I think they're only graduating 20 some students, so student numbers are going down, but the cost to fund the schools are going up. And I thought this was supposed to help level the playing field. Am I wrong?
Yeah.
or-
And I do know about Pittsfield. That's one of the towns that struggles most because of low property values overall. I think there are two separate parts to this picture that we're trying to paint and look at. There is the sources of revenue. SWEPT is just a source of revenue. It's nothing more than that. It goes into, well, right now it doesn't go up to the state pot. It's kept locally and it's subtracted out of the state's obligation. So it's applied against the state's obligation locally. But it's just a revenue source. It's applied against that. As I've pointed out, there's a problem because in some places like Rye or we were just looking at what's the name of the town? Alden or Moultonborough. They're collecting much more locally than is needed, and they're being allowed to keep it right now, and that I say should be in the state pot for distribution out. So that's one thing, the sources of revenue, and this bill is mostly about sources of revenue. The other part is the adequate education program, the program that's designed to spread money out so that places with greater need will get more. I think that's what you're talking about, and that is the adequate education program. Is funded out of the Education Trust Fund, into which this money would pour, as well as other sources of money. And that program right now provides roughly across the state about $5,000 per pupil. It varies because some places have more needy kids than others, and there's some variation based on needy kids. But that $5,000 norm is way below what school districts are spending or need to spend. Pittsfield in particular probably needs to spend more because they've got kids that need a little more attention. And so anyway, it's a complicated story, the sufficiency of adequacy, but that's the other problem. I think that's what you started your question with.
Okay, follow-up question?
One more.
Okay, thank you, Madam Chair. So I understood that when I talked with former Rep Hall, that this tax was going to be, as I said, spread around. Now, was it the Senate that put a kibosh on that in 2011, from what I understand, and there's currently a move to get that fixed?
Yeah, 2000, up until, it's a little unclear to me, but up until definitely as of 2011, the statutory law was changed to explicitly allow, at least this is my reading of it, retention at the local level of all swept proceeds. And before that, there certainly was a period of time when the swept proceeds went to the state and went into that pot and then were distributed out. Doug Hall is helping in the lawsuit that I mentioned that's pending, the Rand v. New Hampshire lawsuit, and that lawsuit directly challenges this excess swept retention system and seeks to, I think there's a summary judgment motion that's now in play that is being litigated with the state of New Hampshire on the defensive side, opposing the motion to declare the current swept system unconstitutional. And that's before a Superior Court judge.
Thank you very much.
So I guess that begs the question, is this premature to do something like this if this is in the courts actively right now?
My answer to that is, yeah, maybe, but there are many instances where the legislature has felt that the right thing to do was to go this way or that way, and there were tensions or arguments over which way was the more constitutional. So we could make a judgment to go ahead. There's nothing to stop us. And at this stage, I favor that just because it's taken so long to get these. You'll see in my report, and that's my report, the committee's report at the end of last year, a reference to this case that I've been mentioning, Rand v. State of New Hampshire. It was pending then, back in November, and now here we are, and now there's another motion, and it'll go on. Eventually, it'll come out. But you're right. We could wait. We could retain this and wait. I'd prefer to see it go ahead and get this more substantial homeowner relief program in place. So I think there's reason to go ahead.
Yes, Representative Fellows.
Hi, thank you, Madam Chair. I have a question about the second part, about the low and moderate income property tax relief program.
Yeah.
Do you have an even a ballpark estimate of what this might cost?
Thanks for the question. There's a cap in the bill of $30 million. And if the cost of the program exceeds $30 million, it will be proportionally, the refunds will be proportionally reduced.
Thank you.
Thank you. Oh, Representative Leapley.
I had a question. I understand the 3% being retained basically because there's a cost for the municipalities to collect this tax. I was wondering why it makes sense for them to collect the tax rather than having the state do it.
It's a part of what municipalities do right now. They put value on property. They've got a system in place. So I think the framers of this bill in the first place back at the beginning of 2000 thought that they needed to assign the task to the municipalities. At that time, they didn't think to reimburse the municipalities for their efforts, but I think that's appropriate. And I should add that the 3% is parallel to what's allowed right now in the rooms and meals tax for restaurants, hotels, and so forth to retain before sending in the proceeds of collection.
Representative Almy.
Thank you. There's some stuff I'd love to say but can't. It was 1999, but I've got here, and I gave to everybody, low and moderate income homeowners property tax relief, the historic claims data. Unfortunately, it starts at 2010. It would be more revealing if it started in 2000 or 2001, whenever we started the thing.
Is there a question?
But what I wanted to ask you was, the claims have gone down regularly ever since that program started. In 2010, there were 12,000 claims granted for 2.3 million total. And by 2021, there were 5,800 claims granted for 1.4 million. And part of the problem seems to be that the forms are complicated. The people who would qualify for enough money to make it worthwhile are not good at complicated forms. And do you have you looked at how to make that claims process work better so that this one would work?
Well, the page that you're looking at is from the DRA, and as the administrators of this program, they may be able to speak to this. I agree that it's complicated and difficult. That is of concern. I think that part of it is that you don't get much under the existing program, and so there's not much incentive to go through the effort. It will be different under this new program. It will be more worthwhile. So I think we'll see a change there. I think, if I remember correctly, that the committee that we're setting up is also going to be looking at the issue, and the 3% retention is explicitly allowed to enable municipalities to reach out to homeowners. So there's that element as well.
Thank you so much. Okay, we have a pink card from Zach, and I don't know what this stands for, NHSFFP. So please explain what that is. Come on up. I don't know.
NHSFAP.
Yes, we're the only organization with a long acronym. My name is Zach Sheehan. I am the project director of the New Hampshire School Funding Fairness Project. I have copies of my written testimony coming around that clearly identify that as well. I will go through some pieces of my testimony, but you all have copies now, and so I don't want to reiterate everything you have. And I did want to actually expand upon a few of the questions committee members. Yeah, it's coming, making its way around. And I also wanted to expand upon a few questions that committee members were asking as well. So first off, thanks for having me here this afternoon. I appreciate being able to testify. To start off, we are in support of House Bill 569, specifically because it would make New Hampshire's tax system significantly fairer in our view. There aren't enough. All right, I can grab some more. I passed 20 copies around, but I can.
And the clerk needs to retain 2.
All right, I will. I'll grab another one as well. So to start off, just some background on why, as an organization, we support this measure and also supported House Bill 504 from last session. Specifically, the property tax is the largest tax collected in New Hampshire, generating over $4 billion to support state and local public services just in 2022. It's significantly more than any other form of taxation levied in the state, which I know this committee is intimately familiar with. Yet the property tax continues to be an unfair tax, as it places far greater responsibility on those low and moderate income taxpayers than it does on more affluent ones. According to data from the Institute on Taxation and Economic Policy, the 20% of New Hampshire households with the lowest incomes paid 6.2% of their incomes in property taxes in 2018, compared with the wealthiest 1% of households in the state, who only paid about 1.9% of their incomes. And despite the heavy reliance on that property tax, our low and moderate income property tax relief program does not provide very much relief to our citizens. Representative Almy, you asked about starting data earlier on. I did cite in 2003, the program provided roughly $7.5 million in property tax relief to over 27,000 Granite Staters, as opposed to in 2021, only $1.4 million in relief. And yet I don't think property taxes have gone down in the past 19 years. It's actually quite the opposite. So in addition to significantly increasing both the number of homeowners and the value of the rebates they would receive, it would raise the income threshold for the program, which hasn't been adjusted since its inception about 2 decades ago. It would also tie parameters would be adjusted for changes in the consumer price index, which is important just so that inflation doesn't continue to erode the benefit of those rebates, which, as the committee was just talking about, might be a reason why some people don't find it worth applying as the amount goes down and the relative relief that they would get from those rebates. It also advances taxpayer equity in another crucial way, as it would end the preferential treatment that some property wealthy communities now enjoy under the statewide education property tax. I would be happy to answer more questions about that as well. Under the New Hampshire Constitution, it's the duty of the state to provide an adequate education to every child, regardless of where they may live. Going back to the Supreme Court rulings from the 90s and the Claremont 2, to the extent that the property tax is used in the future to fund the provision of an adequate education, the tax must be administered in a manner that is equal in valuation and uniform in rate across the state. And currently, it's swept as far from uniform, as Representative Ames was just going over. Some communities with higher property value, recognized as communities with excess swept, are allowed to retain that excess revenue and levy it against their other taxes to reduce them, resulting in some towns actually have negative local education property tax rates, while other communities, like Pittsfield that was being mentioned, are far from negative property tax rates. Additionally, there's another lawsuit that was also mentioned that has been moving right along. In that lawsuit, there's been a couple motions. There's a pending summary judgment motion that I think the state's response is due back on Monday, asking the judge to order the state to stop this process of collecting swept in this way. To date, the state has never defended the constitutionality of swept. They've simply highlighted the logistical challenges of changing that in the middle of a tax year, which is when this was last being heard last fall. The point there being relative to Representative Sanborn's question that I don't think it would be premature to act on this, given that to date no one has kind of pushed back on the constitutionality of swept, and there might be a ruling as early as in the next couple of weeks. And so kind of moving forward in this process, I think would give the committee and the legislature a jump start on any potential changes needed. I'll end by pointing out that this bill also takes into consideration two key findings from the Commission to Study School Funding that met throughout the year 2020. They examined New Hampshire's school property tax system in length, in part because it's connected so deeply to how we fund an adequate education in the state. And the two recommendations they made, the first is that the state should eliminate the excess swept grant, and such excess funds should be applied through the reform distribution formula to improve student and taxpayer equity. There should be no blanket rebates, abatements, refunds, or grants of swept back to municipalities. And the report went on to state that the state should enhance taxpayer equity through property tax relief targeted to homeowners and renters through a low and moderate income property tax relief program. This program should include updated limits to income, home value, net worth, and be satisfactorily funded throughout the state. We believe that House Bill 569 starts to address some of those provisions, and we absolutely urge the members to vote ought to pass, and I'd be more than happy to answer any questions the committee might have.
Representative Fellows.
Are you aware that there was an update to the low and moderate income property tax relief program? It was effective for this past tax year, and people got rebates that were more than double what they had been before.
I was not aware of that.
Representative Almy.
Thank you, Madam Chair. Did you know that when the legislature was hit with a Superior Court decision back in 2000 I think, that declared that the statewide property tax was unconstitutional, that at least the legislature, if not the court, took that to imply that we also had unconstitutional county taxes and unconstitutional on cooperative school district taxes that were at risk.
I was not aware that that court ruling meant those things. I did know that courts and decisions in the past had said that the swept was unconstitutional, and then also multiple Supreme Court rulings have said that how we fund education, which is the other half of the equation, has been unconstitutional and has not been changed to date.
Thank you. But it does add gravitas to that.
Questions on this side? Okay, thank you very much for your testimony.
Thank you for having me.
Okay, we also have DRA here again to help us understand all the moving parts here a little bit better. Mr. Keen Wong. Mr. Wong, before you get started, Representative Fellows just mentioned something that made me think. She said that property tax refunds were double recently, and I'm just wondering, did we do something legislatively recently?
Maybe, Madam Chair, the reason I know that is because it was my bill that did
Okay.
it. Yeah, and so
What was the bill number? Do you remember? Or
I don't remember the number, but it passed. No, I don't even remember. It didn't pass. Not in 22. It would have passed in 2021.
Yep.
Because it was effective for May through June is the application period last year, and it was the first time it had been updated in 20 years. But the numbers you see when you look at the Representative Ames bill are the new numbers. They used to be much lower than that.
so we recently made some progress in that regard.
And just to, since we're just talking on the subject, I have a bill that has already been heard in municipal and county to make people aware of the program, because one of the reasons the return was so low that over the past 20 years there fewer and fewer people fell below the income cap. So some people dropped out of the program, and then the payouts were so low that it just didn't make sense when you can only get, some people can only get 20% of that. So this past time around, the maximum that a person could get would be about $350. And before that, it was down, you know, we were heading toward like $100 or under.
Okay, thank you for that. Okay, go ahead and let us know your thoughts. Thank you.
Good afternoon. My name is Kim Ming Wong, Tax Policy Counsel from the DRA. The DRA does not have a position on this bill. We did prepare a fiscal note, and I just handed out the fiscal note quick guide on this bill. And I'm here to answer any questions. But just as a fair warning, I personally am not very familiar with the municipal side of the DRA, so I might be taking more questions down and having to go back to the office to get the answers for you.
I have a quick question because I've seen caps on programs like this with the what was that?
R&D.
Research and development tax credit. And when we put a cap on it, it created this strange situation where you'd have to wait for a while to see if you got the relief.
Yes.
What are your thoughts on that for this bill?
Right, Representative. So that will be true because there's the cap on a payout for this particular bill per fiscal year is capped at $30 million. And the applications that come in is coming in from May 1st through, I can't remember the exact date where it stops. So whenever the current process is that when the DRA receives the application, we will review it and process it and pay out if it's approved. Everything meets, everything is in order, the payment will be made. And with this $30 million cap, that payout would, that the relief payment would be hold up until we receive the last application for that particular year. Otherwise, we will never know if we meet that $30 million cap.
Representative Phillips.
Under the proposal, the swept tax money would be sent from the municipalities to DRA. What is your interpretation of that mechanism? Because we know that not all people pay their property tax bills on time. Do you anticipate that the municipalities will send you the whole amount even though they haven't collected it, or not, or and then you have delayed collections?
Yes, that could be a potential issue, Representative, because this will be a new system. So the DRA currently does not have a mechanism in place to do this. If this bill were to pass, then we will have to set up the system to implement the collections of these monies from the municipalities. And the way how it will look, probably, as you say, that's something that we probably will need to look into further as we start to implement or start to design the system, is to how do we actually mechanically collect these monies, and what, as you say, what happens when there are late payments. I'm going to assume that the municipalities will not pay on behalf of property owners. So if they are late, they will be late on that end, and it'll be late coming in as well.
Representative Almy.
Thank you, Madam Chair. Did you realize that the towns have to pay the counties whether they've gotten all of their own tax money in or not at the time when the counties have to be paid?
My apologies, I do not know.
I think we need to talk with someone from the municipal division. about
Yes.
Some of this.
Representative Shamberg.
I think Representative Spilsbury was first. He's to your left, madam. I realize you don't look left too often, but I just
Go ahead, Mr. Shamberg. We'll go for you, and then we'll come over here. I have a clerk here who's very diligently blocking my view.
Thank you, Madam Chair. On your analysis, on the back side, you mentioned 2 errors.
Oh, yes.
Is this something that
Right.
can be addressed with an amendment to the bill?
So from when we were looking at the bill or the LSR, the issue that we found potentially, I don't think it's on a calculation error on our end, but it can be double checked. But the $2,000 increment in terms of the percentage of the payout, it caps out to 0 before the maximum amount that's on the bill. So that could be something to be looked into again for both the single as well as head of household.
Representative Spilsbury.
Thank you, Madam Chair. So in regards to the low income credits, there's both an increase in the thresholds, which represents one source of reduced revenue to the state that the state has to make up from other funds. But there's also the change that makes this applicable to the entire real estate tax bill and not merely the swept portion. Has the DRA taken those 2 different factors separately into account in terms of revenue impact?
So the
the change in the thresholds on the one hand and the change in eligibility to be expanded to the entire real estate bill.
because of the cap of the $30 million, so that would be the maximum impact that would be incurred.
I think my question shows that I'm still confused on exactly how that would work, so admissions. But I haven't completely satisfied in my own mind where the impact of the credit lies. In the case of the swept, I believe it's clear that the state makes up the difference for whatever credits have been granted to individuals. But with regard to the broader real estate tax, that's not clear at all.
Any other questions right now? All right. Thank you very much for coming.
Thank
Are
you.
there any more folks who want to testify on this bill? Seeing none, we will close the public hearing on House Bill 569. Okay, I think that means we are done for the day. Great job. We have House session on Thursday. And then we will meet again next Tuesday for, I think we're going to be doing revenue agency presentations again. Does that sound right? Yeah, so we're going to start sprinkling back in the agency presentations. And then, of course, we'll wait to see what the governor has to say on Valentine's Day. Thank you very much. I will see you soon. And Republicans will schedule a caucus probably next Tuesday after we're done with agency presentations. Say that again?
I'm sorry. Is there a Republican caucus at 9 a.m. on Thursday?
Yes, usually both sides will caucus before a session day.
Okay,
Yep,
very
and
good.
usually an hour before.
Thank you.
Right? Do you caucus? The Democrats caucus as well before session day? Yeah. So always plan on being here an hour before session start time to be safe.